Good morning, good morning. Well, it is the 3rd of February, Monday. Wow. First trading day of February, Pete Ward.
Yeah.
What have we done to deserve you in the chair?
I know. Crazy. But yeah, what a weekend, hey? And yeah, lots to come on the open, I think.
There certainly is. I have to tell everybody that Pete Ward phoned me on Friday afternoon at 4 p.m. and went, why is the FTSE going up? There's talk of tariffs, and the FTSE is just bulletproof. What is going on?
Yeah, it was a weird one last week. It was pretty bulletproof all week, wasn't it? I mean, we started the week, it seems a long time ago now, but we started the week last Monday with all the stuff from Deepseek, right?
Yeah.
Yeah. NASDAQ was down 1,000 points. Everything was indicating down, but yeah, the good old FTSE was pretty resilient and pretty much unchanged by the open, and then rallied like crazy. I remember Thursday afternoon, it was sort of like 100-point straight shot through 86.
That was the real telling moment, wasn't it? That's when you had to.
Well, it just felt like that's when there was a big. That's a buyer. It felt like there was a big buyer. You know, maybe institutional or hedge fund or whatever it might be. Just putting money into the UK. But yeah, late Friday evening, I guess we saw some tremors on the news of the incoming tariffs.
Yeah.
I think before then it was all kind of, oh, Trump might put some tariffs in place, and then it actually came to fruition. And also I think the chatter was that they were going to do it from the 1st of March, and then it was all of a sudden that right now actually it's from tomorrow.
Exactly. Yeah. Somebody put that rumor out, and he wanted to shut that down quick, didn't he? Says.
Born T-Bone.
We are live. It is Thursday. It's January 30th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Elias Spivak in San Francisco, Dylan Radigan, Milan. We're here for the next hours. We take you through the futures market close on an interesting day where stocks rebound ever so slightly. We had that quadfecta of tech earnings last night, who had IBM being the big winner on their scorecard, settling in at an all-time high. Meta comes out of the gates pretty strong, too. Tesla able to recover by the end of the session. But Microsoft takes it on the chin. We're now awaiting those Apple earnings here after hours. Markets recover a little bit after a tariff sell-off here, so we can turn directly to the charts. But if you're joining us on the platform or the website, come over to YouTube. Tell us what you're trading. Of course, if you're already on YouTube, come over to tastylive.com, see what we're all about. Gentlemen, we had a really big week behind us already. If it was the Deepseek news on Monday, if it was the tariff announcements today, what's come in between with the FOMC meetings and the tech earnings yet to come, this has been a very important week for markets. But as the dust settles here, net, it's not really shaping up to be all that bad. S&P is back to 6,100 right now as we await Apple. NASDAQ is back to 21,636. If we take a look across the board and we go to our charts, we can see that the Russell here is now trading, and it filled the gap from Sunday's close, or from Friday's close, Sunday open. We can see that the Dow Jones is trading above last Friday's closing level. So, Ilya, is the market changing its mind on what the Deepseek news means? Are we not so alarmed anymore that China Chat CCP is going to dislodge American tech supremacy?
I don't think that was the concern to begin with, frankly, because if it was, then Chinese stocks would have rallied on the news, and they didn't. I thought the concern was essentially that the narrative people had in their mind, the extrapolation for the great AI future, was that to build XYZ capacity, we're going to need ABC amount of NVIDIA stuff and other sort of high cost baselines. We're going to need all these data centers and this and this and this and this and this. And then DeepSeek came out, and the upshot seemed to be, well, actually, everybody's assumptions are probably wrong. And we can probably get to a deployment of AI sooner. The customer base is probably different because people that couldn't afford the spend before maybe could afford this version of it now. So it looked more like an appending of assumptions than it was a concern that the U.S. is somehow falling behind China, or that's what this means. In any case, though, I think what we've seen since that news is stand still. I mean, nothing has gone anywhere. We got the gap on the S&P. That gap has not been filled. We're still basically where that left us. The first down day and the consolidation thereafter. We're in a tightly wound range. And that makes sense to me because after the news, what we had, after the Deepseek news, that is, what we had was just a barrage of back-to-back macro. The Fed, ECB, US GDP numbers, this thing, constantly, Eurozone GDP numbers, all kinds of macro risk, the Bank of Canada rate decision. It makes sense in that context that the market did not want to have conviction. But now that's out of the way. All we're really left with is the PCE numbers tomorrow, and the market is generally very good at benchmarking those. The surprise factor there is probably minimal. So no surprise in PCE. No one cares that GDP was light and had the first decline in investment since the first quarter of 2023. Not important. We get through the Fed. Powell does the dance perfectly, manages not to upend anything at all. The total shift in cumulative policy expectations by year end have moved a grand total of 4 basis points since the beginning of the week. Just an expert dance from Jay Powell, just incredible. He had to not rock the boat, and he was perfectly still. So we have now what to go back to. If the market thought that all of these things would be encouraging, we'd be seeing a rally. If the Deepseek situation were resolved, or even if it were possible for it to be resolved within a few days, as though it's some sort of an event rather than a course shift, that's certainly not occurred, or the markets would be surging. So what are we left with? I think we're left with the de facto ex ante before macro risk. That is to say, we are back in an uncertainty of AI deployment kind of a story with not much else to show for risk sentiment to glom onto as a catalyst. That feels like we're probably in for a rocky day to end the week tomorrow.
Dylan, the NASDAQ has recovered here a little bit over the course of the week. It's now down by 1.3% week to date. It's certainly not the 5% loss that we were looking at at the lows on Monday morning. On Monday, we were talking about, and we've been talking about this all week, if we were to assume
Trump, is he making a mistake? Well, he already did, because when questioned in front of, what's the helicopter? It's not Air Force One, is it Air Force H?
Not sure.
Yeah, what is the presidential helicopter called? When he was standing in front of it, he was asked about tariffs on the EU. Yes, they've treated us very badly. We have a huge trade deficit. They don't take any of our cars. They don't take any of our agriculture. Yet the UK treat us very badly. The EU. The EU treat us even worse. And so he completely messed up. And in his head, the EU and the UK just...
All one.
Yeah.
It never happened.
Speaking of which, because we were all one at once, but that disappeared. And today, Starmer is going to get his face rubbed in it by Macron. This is not going to go down well. So Macron will make Starmer eat humble pie. I don't know, producer Fred. This gets my blood boiling.
Who was the picture up there? That wasn't Macron.
Macron will tell Starmer that his appearance at a key EU summit on Sunday shows that Brexit has failed.
Interesting.
Yeah, because France and Germany are doing so well, aren't they? They're just thriving.
Thriving in recession. Yeah, so yeah, no, interesting. So he's heading over there. Is that today, I think?
It is today, yeah. It's to talk about a security pact, especially with Ukraine. But also, you would imagine the EU leaders will be having some kind of crisis talks. So whether Starmer will have his ear up against the door there or what.
It'd be interesting to let him know how much they let him hear, I suppose.
Yeah.
Now because of the divide.
And Marine One, of course it is. I haven't been watching enough
Marine One, yeah.
of my my movies
Yeah.
with Gerard Butler in it. I should have known Marine One. Right, let's take a quick look at the front page of the business section of the Times then. What have we got? Yeah, mainly, look, the tariffs is the big story, isn't it? Even though it's one of the busiest weeks ahead for numbers, for earnings that are coming out, and for macro data as well. This is a huge week.
Yeah, big week. So, I mean, you touched on there some corporate earnings. You've got Palantir today coming out from the States after the bell. Obviously, they've had a monumental rip from, what, $20 to $75?
Yeah.
Peak
Even higher now.
And you know, you'd have thought, given its kind of military surveillance and they've got big government contracts, you'd have thought that would probably go stronger under Trump with his kind of belligerent ways. So that's out today, and then you've got.
Let's just take a quick look at the daily chart of Palantir there. I must admit, I haven't done enough work on this. It's kind of one of those ones that crept up as a company when I was away doing my dog walking in New Zealand, and I fully admit that I don't have much of an edge in tech, so I haven't put the work into this yet. But listening to Dan Ives at the weekend, he did the podcast with Downtown Josh Brown. I've got to do some work on it.
Yeah. So yeah, do you know the name Palantir is from you know, Sauron's all-seeing eye that he has at the top of the tower in Lord of the Rings? The idea being surveillance, you can see everything, and that's kind of the geek area of it. But yeah, that's why it's called that. So yeah, basically it's kind of it's been at the forefront of AI tech-led military sort of government surveillance, and
it's just
strength to strength.
And well placed for the AI revolution, which is of course Dan Ives' big theme, right? He's his real. How do you describe Dan Ives? I mean, he's a character, but the number one tech analyst in the world. I would imagine you wouldn't go too far wrong in describing him as that. So the guys were. He came in an luminous yellow hoodie, and the two guys were sitting in their luminous green and luminous yellow hoodies with sunglasses on. Yeah. You know, all very top of the market kind of thing. But a very, very good listen. It's called The Compound and Friends, and very good listen. If you want an insight into what to have on your shopping list, right? Because the next couple of days could be an absolute wipeout, and there could be some incredible opportunities. Because it's a trader's market, isn't it, Pete Ward?
To go shopping, for some value or some good good picks. But I don't know. I mean, where are we now looking on the? So we've got Wall Street down 626, down 1.4%. DAX off 2%. US Tech off 2.2%. You know, it's kind of, it hasn't steadied up really from the US Open, from the futures open last night. Realistically, we kind of stayed where we were. Interestingly, the dollar's got further bid, strengthened up against pound, euro, basically all of its competitors. Now got cable down at 122.80, off another 100 from Friday's close.
Do you remember I've got that 123 put spread from when we were last on?
Yes.
And the DAX
one. Yeah.
So yeah, those will be interesting. But Gavin Ackers asking me, Donald asking, did you take your profit on Apple? I was very lucky. I was sitting in Sticks and Sushi, grabbing some lunch, and the market opened, and I was watching it very closely, and I thought, this thing just doesn't look like it's going higher at all. So I tried to sell the 247. Where are we now? I tried to sell the 247.5. I managed to get that away for $1. This was selling the calls against my 242 calls. But the trade of the day that saved the P&L on this was selling one of the 245s at 197 and selling another one of the 245s at 176. So that took in, what, $375? And you can see that was in the first 3-4 minutes of trade there. And of course, that saved it because for the rest of the day, it was a pretty just lackluster performance, wasn't it? It dropped right back. Let's get the 1 minute chart on that. Peaked at 247 and then closed at 236. So that tells you a lot about that appetite for Apple going higher. Sorry, let's just show you that. Yeah, there we go. That's the Apple intraday from the open. Look at that. 247 open and then just not a single bid all day. So yeah, that tells you a lot.
It does. It was strange to see them up because I think I was working when the results were out, and obviously got an immediate kind of pullback, and then obviously all the stuff about the service area that was going to keep growing and get more and more. So then all of a sudden you're at 240 plus.
Yeah.
Thinking, what's going on there? Yeah, and then it just got sold basically all afternoon.
Gavin Arker's saying, interesting. There's some chat on Barclays there.
So they had payment issues on Friday.
Payment issues. Right?
Yeah, basically no one with a Barclays app could buy anything. So everything was down. Yeah.
Right.
Did that? I think it was lasting for. I mean, it was a double whammy in that it was the end of the month, so it was payday for a lot of people, and obviously a lot of people want to use the app to spend money, do this, that, and the other. It was all down. So that was sort of expected.
Did you get a call from the wife when she was in Harrods?
I didn't actually. No, don't bank with them, but. I saw it on TV.
Stick it on the Harrods cards. Much easier. Right, what else have we had? So, Canada, let's talk about Canada.
Yeah.
Fight back. So there it is. Canada is not for sale, Mr. President. Trump talking about this ridiculous idea of being the 51st state. Well, the fight back, the booing over the US national anthem at the hockey games.
Yeah, I wasn't aware of this. Really? Yeah.
Yeah,
tensions are escalating all around then. So
they really are. Defiant patriotism, they're calling that. Where do we get the... Yeah, there were boos from the crowd during the American anthem at National Basketball Association, the NBA, LA Clippers against Raptors. The anthem was also booed on Saturday night at the National Hockey League's Ottawa Senators. I think people have to differentiate between Americans and this ridiculous policy of Trump's. You know, booing the national anthem, yeah, I don't know. It gets a bit tricky very quickly there, doesn't it?
Yeah, next step's burning flags.
Yeah, exactly, yeah. No, just burn pictures of Trump. That's fine.
Yeah. Which, I guess, Trump supporters were doing that sort of thing when they stormed the Capitol.
Yeah.
So.
Having said that, I've got the flag on my arm. Didn't think this through, did I, Pete Ward? Right, so what normally happens in these situations? Well, in the good old days, a market like this, you would see a 2-day sell-off, and on the morning of day 3 is when you would get some kind of rally. So, of course, first sell-off, everybody buys the dip, like last Monday, because the market's down 5%. You know, why would you not buy it, right? But then on day 2, when it continues to see that we are, there's a real chance to GDP getting hit by 1%, which is what's talked about in the press this morning. So huge hits to GDP, which means huge hits to profits, which means the S&P could get a proper lurch down.
Yeah, no, there's all that sort of stuff, and then there's also the the big elephant in the room, which is what they've been trying to fight for the last few years, is inflation.
Yeah.
All of a sudden, you slap tariffs on everything from beer, bourbon to iPhones. Things that everyday Americans are going to be purchasing. It's just going to put prices higher and higher. So then you've got the issues with the central bank, federal bank, Jerome Powell and his boys are going to be looking at, going, well, we've put all these things in place to kind of keep off inflation, and now all of a sudden we're sort of almost importing it by putting these tariffs on. And then, like you said there, you get general pullback in growth because people are buying less. And so, even in Trump's words, he sort of said Americans could be in for some pain as a result of this, because in order for the posturing to work, or in order for it to actually get what he wants to get, they're going to have to go through some of that to get it, right?
In the short term.
So I don't know. I mean, he's saying definitely will happen with the European Union. He's put it on China. Canada have come back saying that they're going to put it on like $150 billion worth of their goods. Mexico coming back, putting it on berries, avocados, all sorts of stuff.
Well, that was one thing in the press this morning. They were saying
smashed avos.
We've got Super Bowl coming up.
That's it, next Sunday.
And Americans like guacamole.
Yeah.
So what are we going to do? This has to be over by next Sunday.
Yeah.
This is the world we're living in. What's it doing to bond yields, I hear you ask? US Treasuries, so the 2-year sitting at 426 at the moment. That's up slightly, not that big a move actually. And then the 10-year 455. The problem is you just don't know what to do with the bond market, because the Federal Reserve, with its dual mandate of full employment and price stability, well, you're getting a huge disruption there, because we're going to see higher unemployment. So the Federal Reserve should act to cut rates to stabilize higher unemployment. But you're also getting higher inflation. So they should increase rates to fight that. So you've got a real pool, and we'll really find out what Jerome Powell's made of. We'll find out, does he want to fight fires, or does he want to ensure price stability?
True. And on the rates front, we've got the Bank of England this week as well. Thursday expected to drop them 12 p.m. Thursday. So yeah, this week is it's big. Like you said, there's all sorts to go. There's lots of different corporate earnings. If you want to talk jobs, you've got JOLTS data coming from the States. You've got non-farm payrolls Friday.
4.1% unemployment expected.
Right. Yeah, and 170,000 jobs added. So it's I mean, all these sort of data points, and then you've got the overarching themes of the tariffs. Plus, you've also then got corporate earnings. Ford, Ford, a big one on Wednesday. Disney.
It's huge, isn't it?
UK wise, you've got AstraZeneca, you've got Glaxo.
Big for the FTSE.
Yeah, I mean, like you said, it's a big week this week.
Who else have we got? We got, of course, Google, Pfizer, PayPal, Pepsi, Tuesday. Wednesday, you mentioned Ford, Disney, Qualcomm. Thursday, Amazon and Eli Lilly.
Yeah. Astra's on Thursday. GSK on Wednesday, Crest Nicholson Tuesday, if you're looking at UK stuff.
So and that's not to mention any of the European ones. So right, Kieran saying check Eurobonds. Let's have a look then at the bonds, German government bonds, the 10-year 243, the move. So we're definitely expecting more cuts in rates in the Eurozone, and the UK also down, but you can see it's the short end in the US where we've seen moves up, so that makes sense. Higher inflation in the you got a smile on your face there. Who's giving you messages on? No,
one of my clients was watching. He's actually an American guy.
Was he complimenting your hair?
The Americans to give a toss about them booing the national.
No, of course, of course. But they might, when it comes to getting their charge for their guacamole.
Potentially, yeah. Who knows? So next Sunday, the big one.
Right, so that's the challenge to all Pete's clients that are watching. Try and make them laugh live on air. What can you give them? What's the most extreme you can go? Right, we've got, coming up after the break then, let's see if I have the upgrades and downgrades in yet. Yes, I do. Thank you, John McGuinness. Live upgrades and downgrades. That's going to come up after the break. We're going to get ready for the first trading day of February, the first trading day of the challenge for the guys in the gallery.
Oh, okay. What? As in they've got to try and outperform you?
They've got to try and outperform me, and if they do,
perform first.
They've got to be up 20% for February. No mean feat.
Yeah.
And then we're going to put them onto a real account
Nice.
Fund
Good.
them.
Yeah. Lead them up.
Right, let's go to the break. We'll see you in a short 2 minutes.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. Then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Right, welcome back. We've got 2 minutes to go until the London Stock Exchange opens for business on this Red Monday. We've got a few things to look at across the board, but coming up is Fast Markets. Fast Markets, of course, when we challenge Pete Ward to listen to your ideas, take them on board, and then see if I should put them on or not. So we've got, it'll be an interesting one today. Drop your comments and questions into the chat there. What stocks would you like us to look at on Fast Markets? We do have AMD tomorrow, so that's going to be worth a look. Good point, Monkey Man. And also, well, haven't done my work on Palantir, so can't trade that. But we've
blind. But that's been all sessions. I think that's all sessions for a while. We've got some new ones added on there though, which are interesting. SoundHound AI. That's quite a big one that's been moving around. $8 to $25, back to $13, 14. Wow. They're using all like the Kia cars for the sound. And also they did a deal with some not Taco Bell, but like a Taco Bell.
Salesforce, I want to have a look at.
Salesforce on there. Shopify, Lululemon. Dell Technologies, Holdings, Chipotle, Mexican Grill, that's a popular stock. A lot of people trade that on earnings.
Trump Media.
Trump Media's on there, yeah. They're doing what he was talking about.
I mean, talk about meme stocks. But
yeah, we're at the bell very shortly.
Upgrades, downgrades, what have you got for us?
Upgrades, downgrades.
20 seconds.
I have got broker ratings. We have got British Land raised to a buy. with HSBC, price target £4.50. Hammerson raised to a buy.
Go on, grab your bell there quickly.
There we go. Oh,
yeah, Hammerson raised to a buy. HSBC cut to hold at Deutsche. 3, 2, 1. Get that market open, sir. And we've got Segro cut to hold at HSBC. Smith's target price, that's what we were looking for. The Smith's target price, that is one for me to buy on dips today.
Yeah, so, we are open.
Whoa, Wetherspoon's taking a hit. Antofagasta, that's right. The mining stocks. Interested to see that iron ore was not down. Iron ore was up despite this news. So Rio's, I would imagine, would outperform the rest of the miners. We got Barclays down 2.7. All those stocks that were right to break out, getting smashed. Glencore, 340.
Yeah.
Oh, no.
Glencore's off 3%. Anglo-American down 2.8. Barclays are off 2.66. Biggest loser is Scottish Mortgage, rather. They're down 3.7%. And the only thing that's really sticking up the top of the charts, as ever, is defensive play, our old friends BATS.
Airlines also getting smashed as well, down 2%. Canal Plus 177. Right. Where's Havas? Going to airlines getting grounded. Terence in the gallery is saying, right, getting an order in for Havas at my alarm's just gone off. 1,000 shares. We've got 10,000 shares at one spot, 4.8.
While you do that, let's have a
is that right?
Place
that order. Yes, that is going in. Right, we got that in. A day for your shopping list. As I said, I didn't want to buy anything on the first print, but I've gone straight into Glencore against my own rules. But Glencore at 340, come on.
Giving it the old, it's going to sell off for 2 or 3 days, and then you go shopping straight in.
Exactly, straight in, about 10 seconds later.
Excellent.
Is there any outperformers on a day like this? Let's see, Rank Group. No, it looks like a funny price there. There is nothing up in the FTSE.
Let me check Rank Group. It's probably still in the extended auction. Let's have a look.
What's getting hit in Europe? Kering down 4, ASML down 3.5, well, 3.8. ASML, that's another one for the shopping list.
ASML, yeah, 695. I think they dropped down to like 650 last week on the back of the Deepseek thing. So every time they start to rally, they get smacked again. But they are the only company that are creating that one chip that everyone needs to do all their, the quantum computing, graphics, and all that sort of jazz. So, yeah, it's
right.
That could be one for the shopping list if it pulls back potentially. But yeah, so where are we now then? FTSE 85.66, that's down 115 points, 1.3%. US tech coming off the lows, still down 2%. The DAX down 2% to 12.92.
Only 2%.
Yeah, and EU stocks aligned with the DAX, also off 2%. So it's
is the
bit of steer here, it's not
vol up 7. I could see that going higher.
Yeah.
Only 7. We've taken such a mark down. I don't know, but yeah, the DAX down 1.9. Oh, I guess of course the euro. The reason why the DAX is only down 2 is because the euro is down 1.3% at 102.20.
Yeah. So the euro is getting smoked. Pound's coming down. And yeah, as ever, we've seen this continuation of strength in the US dollar.
There was a very interesting piece on whether, let me just try and find this. Yeah, here we go. Bank of Japan set to delay further interest rate rises, says Nomura. Now, what does the yen do in that instance? That has led me to change my short-term thinking on the yen, and let's have a little going long the dollar against the yen, 155.67. But also, there was a story on a potential Chinese devaluation of the currency earlier as well. So you can see that I did short some of the renminbi. That was one overnight. So yes, 734.23. That's gone out now, 734.75. There was a story earlier on the chances of the Chinese devaluing their currency, which makes sense.
Yeah.
Right? The tariff's going to hit cause more deflation, and what do you do there with the band that they operate in?
Yeah, I guess that's the tool that they can pull, right? But yeah, no, interesting to see how that plays out.
But so now I'm very long dollar because I'm short cable, I'm short euro. Well, I guess that hits the full basket, isn't it? What would you not short the dollar again? Go long the dollar against? That's the pity.
So where are we now with British Land with that upgrade? 370 spot 6, 371 spot 4. See where Barclays are after that on Friday. The payment issues, they're down nearly 3%, 288.65, 288.9. What else we got out there?
Well, so the three stocks I had last week, Rio Tinto, that is looking down about 2% there, despite iron ore being up. Rio Tinto, 72% of their sales is iron ore, but the stock's down 2% on those concerns. So I'm getting hurt there, and I'm getting hurt in Lloyds. Had Lloyds for the breakout, no more. 61.20, Lloyds retracing. So that's hit me for a few £100 as well. Finally, we've got the MDAX, the mid caps in Germany. I've got that on against the short DAX. So my short DAX, I did go a little bit bigger in that. So that's paying off. I would imagine I'm going to get hit in the MDAX when that opens in 5 minutes. Right. For Expo, now trading down 7%. Producer Fred giving me the heads up on the big moves there. Let's get a refresh of who is getting hurt the most. It is, for Expo down 7. Weatherspoon's still trying to get a price formation. Scottish Mortgage Trust down 3.7. Should it be more than that?
I mean, it's been on a rip recently.
Yeah. Well, would you rather be short NASDAQ or short Scottish Mortgage? Don't know.
I don't think I've ever made any money shorting the NASDAQ.
Yeah, true. Right, what's getting hit more, the luxury names in Europe or the German autos? Which one is it? Because Brexit has failed. So can't imagine European stocks going down. Volkswagen down 5.7, Porsche down 5, Mercedes-Benz down 5. They know those tariffs are coming. Puma just having an absolute shocker. Let's look at Puma over the last week, or is it 2 weeks now?
What's been going on? I haven't been following that one.
Huge profit warning.
Right. And how does that stack up with? I mean, obviously Nike's been a pretty bad chart. Adidas.
Yeah,
all kind of in the doldrums.
Adidas to the moon, and Puma has collapsed. So you can see, because you go into any shop, and I don't think Pumas even feature. It's your Sambas, it's your Spezials.
Yeah. They had quite a good solid brand, certainly in the athletics and sprinting, I guess.
Yeah. Deckers. Deckers got smashed, didn't it?
It did. And they are the owners of Hoka, which is the sort of funky trainers people are buying now instead of Nikes, specifically for running, along with Brooks.
Not helping the share price. That, you can see it's only back down to the level it was at the end of November. But Hoka, that's a real ugly day. So that was at 223 down to 177.
Yeah.
Is that 16% or something?
Yeah, I think that was last week. Is that, here we go. Deckers, down 14%.
14%.
The owner revenue forecast falls short of expectations.
Wow, well, good.
So Walgreens are down 11% as well. You were loving those.
Walgreens, because they suspended the
quarterly dividend.
Yeah.
So to try and conserve cash and strengthen up its balance sheet.
I'm surprised. I didn't think Hoka 200 level was going to be that difficult to hold. Missed that one, didn't you?
Yeah.
Right. So that's right. On is the big one in the US. That must have been murdered as well, because On is at an even higher valuation, I think. Only down 6. Okay. On holding down 6% on Friday on the back of that. Right, let's get an update on commodity world then. What are we seeing, Pete Ward? Oil, rampant.
Yeah, nat gas rampant, up 8%, 32.89, 32.92, up 244 points. Oil up 2%, trading 73.85 roughly. That's WTI. Brent higher, 76.56, 76.58. Now, obviously, importantly, oil carved out from the tariffs. So I think the immediate reaction Friday was fear across everything, and then obviously it was like that minus the oil.
Yeah.
So not
We had a lot of chatter on the old WhatsApp group at the weekend. There's an oil specialist in there, and he says whoever's advising Trump doesn't understand the high quality of Canadian oil and the fact it's needed for those imports into the US. So, you know, there's a bit of Trudeau's got something else in his pocket there.
They seem to think they've got quite a lot in their pocket, don't they? Because they haven't, you know, unlike the weekend before, rather, it was Colombia, wasn't it?
Yeah.
They were kind of getting strong armed. They've really kind of stood up and said, right, well, we're going to fight back. But then, you know, Trump mentioned it. Anyone that stands up to the tariffs will get hit with more tariffs.
It's a cattle clause.
Yeah.
So it goes back to all the fights between Mexico, Canada, and the US before, and it was always over agricultural and beef.
Got you.
So the cattle clause means that, right, if you retaliate, then I jack up the tariffs even more.
So the countries have got beef with each other.
Hey, go on, first one in. He's been on air for 41 minutes.
Finally hit.
Yeah, exactly. Wakey. Right, what are we seeing? Yeah, 102.20 is holding in the euro, and 122.90. What to do with cable there? So, what did we say the FTSE's down? The FTSE's down 1.3% with an additional 80 basis points on the currency, which means that the FTSE's down 2%. Oh, I don't know about that. Should the FTSE be down 2%? I mean, that is...
I don't know. The only other thing that's looming in the background, I suppose, is the rate reduction likelihood of the Bank of England this week. So you could, in theory, see cable come even lower. And you see FTSE getting more of a bid from external investors who just see it as cheap, I guess. If you're looking for, you know, decent, high-yielding dividend stocks that have been, you know, not smashed, but not hugely performing, you could make a case for an argument to say it is just an investment piece whereby you can potentially get price appreciation, get some dividends, and then the whole currency play makes it more attractive, which is why we've seen it rip since the start of the year. I
think I'm going to have I'm short 3 FTSE of the £2 contract, so £6. I did a little bit on the weekend markets, so I think I'm going to cover half of that. Let's cover this one. Because, 2% on the FTSE. It's tricky as well. So gold, but again, I'm buying. I'm telling myself not to buy anything, and I haven't sold anything yet. So I need to sell something to equate this. I think the S&P 500 down 1.5%. Yeah. Let's have a little sell of that. What else is the good hedge? Now, producer Fred was talking to me about Penon. We're seeing a big move in Penon. Let's work out what's going. No, I think.
So Penon are off 23%, 443, 447. What's going on there? Let's have a look.
But it's just a price adjustment.
There you go. Yeah, it's paid rights. There we go.
Okay.
Bit of corporate action.
So the capital raise
by the other side of it. So
okay,
one to pass up.
But it's actually down 1.6%.
There you go.
Is what we're seeing there.
Right, let's have a look at the FTSE trigger page, which shows you the full 100. Still only 4 stocks in the blue. You've got Coca-Cola, British American Tobacco, Imperial Brands, and Hargreaves Lansdown. And then at the bottom end of the board, we've got Segro, Polar Cap, Scottish Morgan that you mentioned, Antofagast's, and Diageo.
I think the how long have you been in markets? 15 years, 18 years?
Yeah, roughly since 2008.
Yeah. So I think what we both know is that on a morning like this, you don't buy something everybody else already owns, because you can't sell something you don't have. Therefore, what we might see a bit of a panic in later is the stuff that everybody's got, which is, of course, US tech. What particularly worries me is this coming on the back of last Monday, right? Because I even know myself, seeing Nvidia down, net 15% from where it was, the temptation is to go in and buy that. So have we already seen a lot of retail coming in to pick names up, and we know that perhaps they don't have the diamond hands that they think they do once you get another down 10% today?
Yeah, potentially. Yeah, I think you're right there, and these things usually come in threes. So what's next?
What's the third wave? Well,
it's interesting. The old, when the blood's on the street, buy the stock, and all the rest of it. All those adages that come out on days where there's a lot of red on the screen. This doesn't feel. I don't know. With the potential for an all-out trade war, you probably would have thought the market would be lower than where we are now. So again, it shows the resilience in there, and also probably some degree of investors thinking that whilst there's a lot of headlines, realistically, there's probably a deal to be done.
Yeah.
Which will be, which is where I guess Mr. Trump comes in with his sort of deal making.
Well,
is that he's not going to sabotage the health of the US economy just for policy.
You almost
kind of what you think, right?
You want an S&P down 5% today to give him a dose of reality, really, because we know that he pays attention to markets. So, the world should really give him a slap today to let's say make those negotiations happen quicker. So yeah, we got that. We've got the timing of it. Do the tariffs? There's three options. Either the tariffs never come into effect, right, and it's delayed. We're giving them another 3 days.
Yeah. Well, Goldman's came out the weekend saying that they think that it's just start of a negotiation and that things will probably.
It's a short term. The betting markets are saying there is a majority chance that they're off by May. So that's option 2. 1, they'd never go on. 2, they're finished by May. And option 3 is that it's a full-on trade war, right?
Yeah.
Now, if this is a full-on trade war, then the market is about 20% too high.
Yeah. And then we have a real moment. But when does that become evident, I suppose, once we get retaliation? Because at the moment, like China, they didn't really retaliate, did they? They said they're going to talk to the World Trade Organization, put some things in place, but they haven't actually enacted anything. Whereas obviously Canada have come out saying that they will. So
yeah,
I guess it's still it's all on. I mean, people you get lulled into a sense of security that things do get worked out, right? We haven't had a big moment like where it's actually hit the fan.
Yeah.
Apart from August.
Yeah.
And that was brought back within a week.
But it really lasted about 12 hours, didn't it?
Yeah.
Shall we take a break and go straight into fast markets then, Pete Ward?
Sounds good.
Let's do it. We'll see you in 2.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome to Fast Markets, where we discuss your ideas, the ones that you've sent in to us, and Monkey Man has given us a good few to get going with. The new stocks that are available for all sessions opening at 9 a.m. every day on IG. What do we think of those stocks? Pete Ward, Soundhound.
Soundhound, so yeah, stock that's been fairly heavily talked about just because of the way in which it's behaved. It's traded $7, $8, then it shot to 15. Over Christmas, I think it got up to $25. They basically came out and said that they've got some deals arranged with a food retailer in the States. It's voice generative AI, so getting rid of the need for, I guess, customer support. And they've also now embedded in all of the voice activation technology within Kia, so you know all of their cars as well.
Right.
So yeah, it's
this one in yours?
It's a Larry stock. I mean, look at the chart. I mean, it's been misbehaving, behaving, all sorts. But yeah, certainly a bit of a roller coaster. But like any of these sort of new kind of AI based stocks, it's trying to put a handle on what the valuation of this could be. But yeah, so far that one's been moved to all sessions because we're getting a bit more traffic on it.
Okay.
But yeah, I guess to check one back to you, you're quite into your sports brands and such.
I'm just looking at the expected move for this thing.
Okay, yep.
So, wow, the vol's 123, and it's expected a $4 move for March. That's including the numbers. Mm-hmm. So you've...
So I think Larry was right.
That's 30%.
Yeah.
Wow. Okay,
as a value hunting option seller like yourself, that's got to be quite attractive, right? To try and orchestrate something.
Well, I
expect to see this in your portfolio later.
The portfolio is going to look interesting today with vol up 7%.
Yeah.
Thankfully, I've got some VIX calls to cover myself, but still, it can get a bit leery. Right. Hit me with it.
So what about Lululemon or Lululemon?
Lulu's it's one that I do like to play. Mm-hmm. I don't always understand it because my general thinking is a pair of $120 sweatpants or yoga pants is how many yoga pants can people actually buy?
Well, you say that, but then look at Sweaty Betty. I mean, it's always packed. People are paying up.
Yeah, but we're in a cost of living crisis. If you've got to pay £25 to go to a yoga class, does that mean you're invested enough to keep on buying more yoga? Like I still run in t-shirts from 5 years ago, mm-hmm. and now that's because I don't run very much. So that's the idea: do less exercise.
They still fit.
Oi, oi. How's the diet going?
Yeah, good, thanks.
Yeah. Really? So but it's back up to that 415 level. So I am happy to constantly sell calls in this thing because I just don't believe, although they've got a good brand, I don't believe in the American consumer for much longer. Therefore, today I am going to sell calls at maybe the 440 level, mm-hmm. And I'll be happy with that.
Yeah, and would that be outright then, or would you have you got some coverage in terms of?
No. And I don't think I'd even sell puts because, I don't believe there's other retails I'd rather sell puts in and selling calls in this.
Oh yeah.
Is it a good time to short gold? Pete Ward, Parth Jolly says.
So I mean, like all these markets, when you hit your all-time highs, it becomes more interesting, doesn't it, for people to start to think about having a a short piece on there. I mean, traditionally, gold used as a hedge against the currency if you're, in dollars and whatnot. But what we've seen recently is obviously dollar ripping, gold ripping, gone together. And it's been, I mean, the chart's great. Personally, I don't know. It's not a market that I'd like to sell, just because of that whole defensive thing and what's going on in the world at the moment. Anything that sparks off any sort of more, whether it's the trade war, whether it's more issues in the Middle East, whether it's whatever it might be, Russia, Ukraine, gold is always favoured as something to have in the portfolio.
Let's play it through.
54% long, so 50-50 really.
The clients are 50-50.
Which is strange actually for gold, because traditionally that is something that clients are typically long of. But obviously when you get to all-time highs, people start to take a bit of P&L.
Mean reversion. Well,
not necessarily reverse, but maybe exit.
Let's play it through in a fundamental way, right? We get tariffs on. The tariffs hurt growth. Therefore, the Federal Reserve can't cut rates because you get inflation as well, but they can stop QT. So I think that is what happens here, is that we come to an end of QT, and that is a huge beneficial movement for gold. If we started to see the dollar come off, which ending QT would have an effect of loosening the dollar, then that would be another upsurge. So I think this is 3,000.
Okay, interesting.
I really think, and that is how I am positioned in the options world. On GLD, you can see there.
You could pick up a 3,000 call for $50, June. That is. So yeah, I mean, you could take some, put an option strategy around.
Well, I've got the 246, 258 from March. It's already at 258, so that's at the top of my range.
So along the 246, financing those by selling the 258s higher up. The old poor man's covered call, I believe they call it.
and then for June, I go one higher because I think we get the move towards 3,000 in June. So the 270 by 320 in nice. Bigger size. Starbucks.
So yeah, so I think they came out with their numbers. When was this? Let's have a look.
Numbers were all right. They weren't as bad as they could have been.
So basically, we've got, in the platform now, we have tip ranks, which you can see there at the top. So they actually, really like this. They've put it up to an outperform of 10, which is the strongest rating that you can possibly have, which is quite interesting. So if you drill into that, you get why. Analyst consensus, moderate buy, blogger sentiments bullish, news sentiment very bullish, technicals positive. All this sort of stuff. So that's quite interesting and a nice handy tool to be able to use as well. And then if you go further down, you get the analyst consensus, which gives you the buy, sell, hold, all the rest of it. So it's 15 buy recommendations there.
But look at the average price target.
Average price.
And this is where the thesis falls.
Yeah, so 109, and we're almost there. So not that inspiring, I suppose, in terms of price targets. There are some higher up at 120. But yeah.
So I've very simple gone for a strangle on this one. You can see it there. Let's go out a little bit further. So strangle on Starbucks with what's this thing? Come on, move up. We've got just the very simple selling the 95 puts and selling the 120 calls. So that took me in. Traded price was $1. So I've taken $1 out of that. Nothing great. Come on, guys. Taking in $1. So nothing great, but I'm pretty relaxed there. Short the 95 puts, short the 120 calls. So just shit coffee at the end of the day.
Yeah, interesting. And then I guess one of the other ones that's on the list there is Broadcom.
Yes.
Any thoughts there?
It's had an incredible surge since last Monday, and it's been taken as one of the beneficiaries of this, which is I don't know. It's tricky for me to see. Let's see the last week. You can see a big drop on last Monday, and it's recovered at least half of that. Of course, it's going to get hit today, so I would expect it to be down, what, 3-4 today, perhaps?
Yeah.
This all goes back to the great numbers we saw in the last quarter. I'm not sure one quarter is enough for me to be comfortable enough to buy this, you know, as a long stock position.
Right.
Yeah, it's tricky. I want to see, I don't want to do anything now. I want to see the numbers before.
I think, today more than ever, the 9 o'clock all sessions market, the ability to have that at your fingertips is a great additional. But also, you know, not necessarily just to trade, but just to get a good steer on things early doors, especially on a day like today. And I do think once we see those, we might see some more movements in the indices, because at the moment it's kind of like, oh, yeah, potential trade wars, but let's see the actual impact in the stocks from 9 o'clock. You know, as soon as you get a pre-market price on Nvidia, which we know basically is kind of the bellwether of the whole market, right?
Exactly, yeah.
You know, if
Does
that's,
it continue
if that's
to be?
sub 118, I think the key levels there are, what we read last week was like, it has to kind of hold and stay above 118. If not, next target's like 102. There is quite a yawning gap between there.
Okay, that's your next fast market then, Nvidia.
Yeah. So
what do you do?
So, well, wait and see what it comes in at 9 o'clock. And yeah, basis what they put out there last week on the technicals was, yeah, it needs to kind of hold and close above that sort of 118, 119 level. And if it doesn't, then yeah, it could be an opportunity, not necessarily to pile in, but just wait and see if we do get that 2 or 3 day follow on like you were mentioning, in which case it is a stock most people you speak to, they want to have some. It's just no one wants to buy it. No one wants to buy it at the top. So it's when do you wait?
And so
when do you act?
Yeah, 115 is back to this level here, isn't it, that we saw in October?
Yeah, and then you're down to 102. So
yeah, well, Axel will be a good one. Let's watch Axel in his 10 a.m.
Yeah.
Now, the most important man in the building today is Matt Arbour, because he is the king of volatility. Angeline will have Matt Arbour up there. We'll get rid of these useless sales traders that just tell you, well, we might buy. We'll wait and see what happens.
Well, it works for you.
Good stuff. That's right, Vistra Energy. Let's also watch those energy stocks today. Somebody like Dan Ives, say a great podcast, so Compound and Friends, Dan Ives, that's about 45 minutes long, some great insight to all the tech stocks, all the AI revolution. But he also speaks about the energy companies as well, including Vistra, and says this development in Deepseek doesn't curtail any of the energy demand. It actually brings it forward.
Okay.
So you see just as much as we were expecting, if not more. So this is an opportunity in stocks like Vistra.
Okay, cool.
So yeah, that's another one on my radar. Pete Ward, I won't go as far as say it's been a pleasure, but thanks for coming.
Thanks for having me. See you again soon.
We'll see you after the break.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
I'm Ben Hemmingson, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Good morning. Welcome back to the show, Trader Friends. And we are here with Matt Arbour, IG head of the Volatility desk. How was your weekend?
My weekend, good Lord, I was on an under-18s rugby tour, so
Nice.
what goes on tour stays on tour.
Stays on tour. Was there a good? You had good weather for it.
It was sunny.
It was sunny?
pretty cold, yeah.
Yeah.
In Bath,
But
nice city.
No rain.
No rain. Yeah.
Cold doesn't matter because running around anyway.
Cold doesn't matter, and the guys' game got cancelled, so some hangovers were spared, I think. But no, it was a good weekend. Good group of boys. A lot of singing on a bus. Not from me,
From you?
the boys. No.
For those of you that don't know, Matt Arbour not only has a really good voice, but
Doesn't
he is a mean dancer when you can get him on the dance floor. Speaking of dancing, this week is going to be another mega week. We've got jobs course on Friday, and then we had all of the cacophony from last week. But more importantly, tariffs now underway.
Well, here we are. Another Monday morning, another sharp move overnight. Certainly on US futures. I suppose Asia leading the rout. Sharp move lower on the Nikkei, which we've not seen in this, since start of the year, really a move of that magnitude.
Yeah, up 79 basis points. You know, last time I checked, it's a real march up, not just on the daily, but also on the. Let's have a look at the daily. Yeah, here we are. You know, Nikkei, you think is going to be closing that gap anytime soon? We had a gap on a daily.
Well, we just came off sharply in the Tokyo session, didn't we, on the cash? The strange thing is, and I suppose this is the perversity of being in the market, this is not new news. Trump has been clear from the outset that this is what he's going to do, and each time he re-emphasised it, we seem to take flight. This is, you know, perhaps strangely amongst politicians, someone who might actually do what he said he's going to do, however odd it might seem. So that we're seeing, you know, the Canadian dollar sell off really sharply. There's been clarity that there's going to be tariffs with Canada. It's sort of a strange one. It's almost, I don't know, do traders only watch Sunday with Laura Koonsberg to pick up their week's news?
Maybe they do.
It's something odd that we get Monday morning. Monday morning is when bad news distills into the market.
They were busy playing ice hockey and eating maple syrup before then. Maybe that is why. But yeah, here we are. The dollar CAD. You know, seeing that, you know, move there. Interestingly as well, or I guess not as interesting, because we're seeing that Trump is following through with what he has promised. The dollar rising.
Well, yeah, it's continuing. Bit of a retrace last week, but back in the ascendancy, the dollar, that sort of a post-Trump macro trade that everyone was aware of, everyone was in favour of, is back in vogue again. I suppose your favourite cable, not back to its lows, but treading back below that 123 handle, back into a 122s, I think, overnight. So it's here
we are, cable, just punching that up for you, trader friends. This is the monthly, but let's have a look at the daily chart. For you, firmly at the 123.
So just back the dollar back in the ascendancy, and I think we're going to continue with these moves, stronger dollar all week, and really looking for Friday's numbers. Although it's sort of hard to know what the market is going to pin itself on following, you know, the sort of softer CPI, softer PPI. You know, does the market sit back? You have tariffs; these are naturally inflationary. You know, it's difficult to know what the market wants, where the Fed is sat and where policy is sat. Are two completely different things at the moment.
I mean, my personal opinion is that we are going to continue to see more and more of this tightening of the tariff screw, and therefore, you know, we're going to see this underpinning of the US dollar strength. I mean, is the volatility side of things underpinning my theory?
Well, yeah, the dollar vols have been high pretty much since, well, before November going through. Certainly, euro dollar vols have been sort of double this time last year. A euro dollar vol in the doldrums completely. We're looking about 5-6%, you know, tending down to a 4% vol on euro dollar, trading towards double figures again, the vol on that. Yeah, and it's just as that emphasis. People look at you hardly ever saw the euro move in the Asian session. We're seeing 50 to 100 tick ranges quite commonly now overnight on euro dollar. It's not that quiet trade. Go away from a European end of US session, leave your positions open, expect to come back and see the same thing. No, you need to keep an eye on your FX overnight at the moment.
We are also, you know, seeing lots of comments, hard and fast, from lots of currency strategists across Asia, you know, saying that it's hard to see the US dollar retreating anytime soon. And that the dollar has gained, this is Mizuho, has gained at the expense of currencies of US trade partners. So this is the pattern that they're seeing. Equities, I mean, the bulls that were hoping for this. Trump is great for equities. Do you think that still stands, or we're seeing?
Well, has been great for equity,
Is it-
sadly.
but
Let's not get
now
carried
is it-
away.
Is it all going to?
It's all coming down to.
Yes.
It was all coming down to earth last Monday, wasn't it? As the new AI revolution or the end of the AI dream. It's another Deepseek, you know, sort of on the back burner again. How much of that was true? How many NVIDIA chips did they actually use? But we're back into fundamentals again as the story here. Look, yes, the sell-off in the US started off on Friday night post-Europe. We saw a fairly sharp move down sort of post-lunchtime in the US on Friday, and we've seen that continue today. But if you look, we're still up net on the week last week on most US indices. I think we were. So it's definitely still a bullish overall picture. But there are people who are twitching, looking to take money off the table given the opportunity.
The other thing that I noted late last week, as Matt here was, starting to hit the jollies late on Friday, I was kind of still wondering, what is this week going to bring? And I have a long position. This is the Ange diversification away from NVIDIA. So I have position on Exxon and Chevron. This is a long pension position. And I noted that the results were mixed/disappointing from the two. I mean, oil has moved.
Oil had a decent move overnight, hasn't it?
Yeah, it had a decent move. Just putting up WTI here for you, up to more than 2% at the moment. We are seeing this move back up again, which ruins my. I had a short on it, but. Do you think that as we creep towards non-farms, this might strengthen further? I know it's hard to look into a crystal ball.
It is hard to look into a crystal ball on oil, and even then relating the price of oil to your Exxon and Chevron positions. It's not quite as vanilla as it once used to be with an oil major.
Yeah. Let's take a look at Brent as well. Where are we on Brent? I mean, natural gas is just on a tear. Look at that, up almost 8% at the moment. We've got a few natural gas traders that watch the show, and they keep asking, how much further is it going to rise? I don't really trade natural gas just because I don't understand it enough.
Natural gas is a difficult one, and of course that comes into tariffs and sanctions, doesn't it? Europe are a net importer of US natural gas, have been since Ukraine issues. So I suppose it's another weapon that Trump has to employ against the European trading bloc. We've not really seen how that side of things is going to develop. He's gone for the borders first, but sort of the undertones are that Trump doesn't really like Europe. He wants to use his stick to beat Europe a bit. Natural gas is one of the weapons that he has.
I'm surprised he hasn't done it already, really, given, it's winter. A lot of people, traders go, why is it heading higher? Well, it's
always a surprise. Always a surprise that it gets cold in winter.
Right now, everyone's whacked up there.
It's crazy, yeah.
They're heating. I am trying not to whack up my heating, as you can tell, but it's quite warm in here. But I am trying to, be a bit better for the climate and doing that thing. You're clearly not.
No way,
a t-shirt over there.
The heating's actually on in the office this morning, which is unusual for a Monday.
It's unusual. They tend to turn it off these days.
Usually on a Monday, it's pretty cold in
here. Freezing.
Yeah.
But we're warmed by the warmth of our trader friends that watch this show. A lot of trepidation coming up ahead, or mentioned by a lot of the people on our comments box ahead of the non-farm payrolls. Are we going to see further resilience in the US economy? Or should they be concerned?
Well, this is the thing. The US economy is resilient. Job creation is still there. There is strength. That's not to rate cuts. So, the whole picture, everybody wants to talk rates lower, and yet the economy and certainly tariffs are not going to help rates come lower. It sort of doesn't work. You can't have everything. So Trump obviously wants a strong economy. He wants to create jobs. He wants buoyancy. He wants US jobs, but he also says he wants lower rates, and the two things don't work in hand. And I suppose the Fed have been fairly good at managing expectations, and the market has believed for a long time, and sort of were disabused of that notion going to Christmas, that rates were going to come off much quicker than they have done. I suppose the picture has sort of gone back with the weaker CPI prints, or the inline CPI prints, that we're in a position now in the States to bring rates lower. But is this going to happen quickly? I don't think so. This, as tariffs play out, this is inflationary stuff. And price pressures, local price pressures in the States. It's great if you're a patriot, hearing these things.
The flag out, the hat, and everything.
Exactly, but at the end of the day, you get cheaper goods from countries who are they might be dumping their goods or whatever. Cheaper electric cars from China are better for you as the consumer than having your protectionist ban. Okay, it might not be good for jobs, but.
Shout out to Director Phil, whose birthday it is today. He also gave me some instant, insight into price of an average breakfast in San Francisco, because he's just come back from there. And he was like 30. He said after conversion, 30 quid. For an average.
What's an average breakfast these days?
I mean,
having sat in a travel lodge watching what people will consume when there's a free breakfast or an all you can eat filthy breakfast on offer. Some people's average breakfast is just mind blowing.
Mine is the free IG cereals that we get with here, with our wonderful fruit basket, which I actually really like. I really rate that fruit basket. People listening out, I really rate the IG fruit basket because it's something I really use.
Find there enough oranges left? A lot of people complain that some people take a lot of citrus fruit out there.
Yeah, no more citrus fruit.
That's a joke at myself.
And also when you've got there later than the PCMs, there are no bananas left in the basket.
There are always bananas left at the moment.
Not when I get there. I'm here sitting down for the show, right? You can go there at leisure. Speaking of that, a lot of people saying, listening into this conversation, thank you, Dan Acker. Good day to you there. He says volatility, the VIX 22 already this morning. Yeah, that's right. And we're not even close to Friday yet. Another trader friend also coming online, bigger BAs saying Forbes magazine this week in credit card news, numbers showing that US consumers are stressed. Conversely, have to also say that if you look at numbers from Statista and I look at the quarter-on-quarter numbers, it does look like household debt to GDP, the ratio is coming down. We're also still seeing some resilience in terms of, spending and
it's a confidence thing, isn't it? It's the difference between the US and Europe and the UK is Trump is very bullish. There is confidence there. If you're a consumer, you have things to be confident about.
Yes, and that's why their debt can continue to rise.
Exactly.
But they're still spending.
Here in the UK, we're being gaslit into thinking they're bad things, but
this could be another show. This is like a whole other show.
Yeah. But the idea, the terrible things we've got.
Potholes,
potholes, whatever, black holes, potholes, holes everywhere.
Shoplifting.
Yeah.
Not that they're not true, but I kind of feel like the vibe isn't helping.
It's a very downbeat vibe.
Terence, how much time we got? This could be another show. 60 seconds.
How do you get growth? Let's leave it on that. How do you get growth if you're talking down your consumers? It's a difficult one.
Clearly, airport expansion, because I swear I'm being
rolling out the white elephant of a third runway at Heathrow that might be built in 10 years' time. Come on, this is politicking. It's just poor You know, everyone likes to talk infrastructure. You said Boris loved infrastructure more than anyone else, and the talk of building grandiose projects. But this is all sort of green tomorrow. This is long-term stuff, and we never finished anything in the UK anyhow. So
Yeah, we pass it on, kick it down the
kick it down the line.
And we've got Aaron Bright coming up right after this. Thank you so much for joining us, Matt. As always, a huge pleasure. Got more questions from our trader friends, but I will ping that to you and we'll get those answered.
Cheers.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, welcome back, trader friends. We have opening bell for all sessions in just 2 minutes time. 2 minutes time. Talking about this earlier, some people saying that, you know, it's going to be a rocky time for markets. Others, like myself, feeling like it's time for shopping. What do you think, Aaron?
I think we could be in for a little bit of a shopping spree later, definitely. Given what we've seen coming out of Japan, coming out of obviously what the UK has done this morning, and what the futures have been showing us. So I guess, you know, all eyes on all sessions, and then we can see where we're going from there.
Yeah, it's also a really key week for all sessions because we've got all these like earnings, big earnings still to come. What do you make of the earnings season so far, Aaron?
Yeah, we've had some strong ones. I think the banks started to post some good ones. Obviously, we saw Tesla and Microsoft sell off a little bit, but yeah, I think so far nothing too out of the ordinary. I mean, do you agree with that?
Yeah, I think, you know, as expected so far, no shocks, thankfully. This week is going to be huge, as I mentioned earlier. We've got, you know, Palantir. We've also got, this is Tuesday. Yeah, super micro. Amazon, I think it's in a bit like midweek, I feel. 40 seconds to go. We also have, of course, that huge non-farm number coming out. We talked about this earlier with Matt Arber. We'll get your thoughts in a second, but we are almost at the all sessions. Just a reminder, trader friends, of course, the tariffs have been imposed on Saturday. Canada, Mexico, China, 25% on Canadian and Mexican imports, and 10% on Chinese goods with immediate effect. Of course, this was all expected. Let's have a look at what's happening on the all sessions, because we are out the gate right now. Just having a look there. Clean Spark down at 8%. Coinbase also down a lot there, 7.5%. Maro, MicroStrategy, the Bitcoin related ones are all hurting, as we heard earlier from our trader friend Dan Akif. Crypto was wrecked over the weekend. Yeah, thanks so much, Dan, for also reminding us of that. Do you want to read out some of the other losers at the bottom here?
Yeah, obviously Nvidia, Beyond Meat, Novo Nordisk all down between sort of 3-4%. Virgin Galactic, 3M, eBay, all down in excess of 2%. So really, bit of a bloody scene there.
Risk off for tech and crypto.
And you sort of tend to see them move in tandem. I remember, I mean, this was a while ago, but I remember an old boss of mine sort of call crypto a bit of a proxy for the Nasdaq and a proxy for risk. So no surprise to see them sort of moving in tandem, really, when we've seen sort of a risk off, I guess, sentiment unravel.
And it's times like this when you see this real herd mentality play out, right?
Yeah, absolutely.
Like everyone gets dragged down when you have this like, bad vibe. But conversely, if we see, a good data point, or if we see NFP, surprised upside, you also get that herd uplift.
And I think if you look at it from sort of a quality or a sort of a traditional perspective, is are these businesses sort of, in theory, is their intrinsic value 8% less than they were on Friday? Not really. It's a bit of a reaction to the news more than anything.
Yeah, I'm just answering Bigger Bees there watching. Hey there, morning to you. Amazon down 2%, all sessions there. Of course, this one is one of the really big FANG stocks that we watch here, and they are down going into what is a huge week. Of course, we got all these big earnings coming up, but we also are wary, of course, that last week on Monday we had that shakeout in the tech sector.
Yeah.
And the tech sell-off still causing some consternation as that jobs data looms. What else is moving? Let's have a look there in terms of my all sessions list. Here we are. Also, we had another trader friend asking this morning, IAG currently up against oil prices which are higher. Any thoughts there?
Yeah, I mean, obviously, just because it's an intraday move, it might not specifically be correlated to the oil prices, but yeah, obviously we've seen IAG post some good performance, as we can see there.
Yeah, it's been on a tear, but also don't forget, for those of you trading this, I'm going to try and zoom that out right now. Airlines have had a good run of late, and I'm just showing you the chart here. Take a look at that. That is the daily chart for you. They have been doing really well because many of these airlines, the big ones as well as the smaller, budget airlines, the EasyJet, the Ryanairs, they're still feeding off that post-COVID glow.
Definitely.
And we're about to go to live from the trade desk, but for those of you trading this space, also bear in mind many of the big banks out there, like the Barclays, they continue to upgrade the sector due to this ongoing thirst and demand for air travel and experiences by consumers. Right, we'll stay right there. We'll be up, and Aaron's going to stay here with us to do live from Trade Desk. Right, here we are. And we have Aaron back here with us. Aaron, what do you think will be the biggest movers, the biggest pivot points this week?
Well, I think obviously we've got some big earnings coming up, so that there's a lot of potential for those stocks to move intraday and intra-week, I would say. And I think going forward, we need to see sort of the response to the tariff data. We need to see what the retaliations are going to be. So we've obviously seen Canada respond quite heavily and sort of impose their own retaliatory tariffs on the United States. And we've seen, I was just about to say, we've seen I think it's the Canadian dollar fall to the lowest level since 2003.
Yeah.
So really, really interesting to see that there. But yeah, we're going to likely to see big reactions from import-export sensitive stocks. So stocks which get their means of productions or goods from other countries. If obviously their costs go up, if they've got a 20% hit in costs, we're likely to see sort of some volatility in those areas.
Let's take a closer look at the loonie. This is the daily chart, but to see a real, get a real sense of what Aaron was talking about here, I'm going to put up the, monthly chart for you here, and we are seeing the Canadian dollar skidding to a 20-year low versus the greenback. I mean, it is something to behold. And Matt and I were just laughing about this for the CAD, dollar CAD. It almost seems like there's like no one's watching at the weekend, and then they suddenly react on the Monday.
But I wouldn't say it's too much of a surprise.
Yeah, given it's been flagged so well, right?
Yeah. And just given the fact that tariffs are by nature protectionist policies, so you'd expect that the tariff imposes currency to rally, which is what we've seen.
Also, China's yuan slid in offshore trade as well. I'm trying to check that for you by making my chart a bit smaller. There we are. But, we saw a real reaction there. Here we are. Here's the chart on my workspace. Thanks, Terence.
Yeah, similar sort.
Similar sort of story there. We're seeing that gap, and it's now trying to close that gap. Oil also jumped, as I mentioned earlier. Andrew McKelvey, you heard Aaron talk about, and myself talk about airlines as well. ICAC, that might be, they're still rising because overall, the outlook, especially by banks for the airline sector, still remains bullish. But back to Trump and tariffs, metals did also fall on concerns about what the tariffs are going to do to bottom lines. When do you think we might see a real, hit to company earnings and all that start to filter through?
Well, it will take time for sure. Take I'd expect at least a few months, if not a little bit more. And Trump himself has actually said there might be a little bit of pain felt with these. And companies obviously have a lot of tools at their disposal. I mean, if you face an increased cost, you can just put up your price. So it might not actually be that companies' earnings fall if they can offset it with increased prices potentially. But obviously there is concerns where in price-sensitive areas where there's sort of a high elasticity for consumer demand, then we could see companies really face earnings compression because they won't be able to put up their prices and they don't want to annoy their consumers really. So that could be a really tough area where we could see earnings fall for those sort of companies potentially.
We were talking in the break before coming on. I was surprised that America hasn't hit Europe as hard just yet, or maybe that's the next.
Yes, is the key word there. So.
Yeah, maybe that's the next step. But especially now being winter, if he wanted to really turn the screws, now would be the best time, right? In terms of natural gas and all that. The America's already, just showing you this, whacking this chart up for you, already, hit its top 3 trade partners. Mexico, Canada, and China together account for 40% of U.S. trade. And so is the expectation, Aaron, that we are going to see more of this going forward? I mean, or is now when he just pauses for breath and waits for the impact?
For the EU, do you mean?
Yeah.
So I mean, it depends if he wants favourable trade terms or if he wants to reduce the US's deficit, then absolutely we could see more tariffs. Trump is very pro tariffs, so I think unless we see sort of a real change in sentiment from his mindset, then a real change in his view, then I think we could see tariffs be imposed on European Union nations.
Yeah, many car makers like Volkswagen already coming out and saying they're hoping for talks in order to avoid these tariffs. But there has also already been a reaction across Asia's factories. Factory activity has weakened. Even ahead of these Trump tariffs, we saw lots of companies in the US trying to get all the spare parts and things in from export nations to try and avoid being hit by these tariffs. Is it something that you expect to continue rattling the markets? And should traders be looking out for these chinks in order to trade them, or actually keep calm and carry on until we hear?
I mean, I think with Trump, there's always an element of surprise and there's always an element of uncertainty. So I think, yeah, it's something to keep an eye on. And I think what we've seen over the past number of years during his first presidency, that they can be sort of unexpected, or he can say things which has the potential to move markets quite quickly. So obviously he put tariffs on China in 2018. We saw markets rattle and really not like that towards the last quarter of 2018. We saw quite a nasty sell-off in stocks, I think November, December time. So I think it's an area which investors really need to keep an eye on. But I mean, obviously, do we think that this is going to affect long-term investments? Probably not massively. It's more the short term where there's going to be pain.
Let's take a look at, that's a really good point. Let's take a look at some sectors that were hit the last time Trump was in office, and we had, I kind of feel like we were watching, like I'm having a bit of deja vu.
Yeah, me too.
But let's have a look at German auto stocks, and as you can see there, they're down heavily today, not just because it's risk off, but because of the concerns over tariffs. But the last time round as well, we saw weakness in terms of EVs and PGMs as well, because now everything's in flux, right? Are we going to, if you're someone that's looking to buy a new car, do you decide actually the EVs aren't going to have as much R&D and support in terms of infrastructure, and then you go into something like the hybrid space, right? And which will then,
well, they don't tend to hold their value so well.
No, they don't.
You can buy sort of a 2-3-year-old Tesla, I mean, for sort of a fraction of what it was once worth.
Once it rolls off the
once the battery starts, it's like an iPhone. Once the battery starts fading off, they sort of really plummet in price. But I mean, to your point on what are these companies going to do? I mean, the easy solution, and if I was a CEO of an auto company, you'd look to sort of onshore some of the production to the States to get around the tariffs, which obviously Apple famously did last time. Tim Cook and Trump had a meeting and he agreed to onshore various, manufacturing processes for iPhones and Apple Macs, I believe. So that's just a way where they can avoid this hike in costs.
Yep. And the playbook as well indicates, at least from the last time, that it is likely to be rocky early on. Yeah. But then indices do stabilize at some point.
They're forward-looking, aren't they?
Yes.
So once the tariffs are baked into the cake, then they're looking for the next thing. They're looking for the next interest rate cut, the next employment data. So once tariffs have sort of been absorbed, as you said, they're forward-looking.
Yeah, I believe the first time round, his first presidency, the S&P returned something like overall about 13 to 14% annually.
Yeah, brilliant. Yeah.
After it was, divided out.
That was after sort of COVID, whether we had.
I know, exactly.
Yeah.
With COVID in that as well.
30% correction, and biggest correction since 2008, so pretty much. So, yeah.
And I don't think I think the only president to beat that return, year-on-year return, is Clinton. I think, if I read that right. I was trying to fact check these numbers over the weekend. I mean, that is a big return year-on-year. As the S&P historically has only achieved something like 3 to 4% annually, I believe. So a big one there. Taking a look at the luxury makers as well, right? Because this is a good barometer of the outlook too, and how markets are feeling, and also how the Chinese are feeling. This is currently down slightly. Terence, you know, whack up my chart there. Yep. Kering down 3.6%. Hermes down 1.3%. To me, that might be an entry point because Hermes is good at weathering the storm, whether it be the luxury sector or stocks as a whole. Any of those that you like there?
Well, I like all the luxury brands. I mean, look, they're really. I mean, in all seriousness, they're all really quality businesses. Huge, diversified streams of income across different areas. So obviously, we look at LVMH, they've got the sort of alcohol brand, they've got Louis Vuitton, and they've got various other areas. Same with Kering, you know, likes of Mont Blanc and various different companies in them. So obviously, very dependent on you know, how the global economy is in terms of these businesses. But look, if economic data remains strong, these businesses should be able to weather the storm. And you also will have that, I guess you could say, that sort of old money, which is always going to be buying these brands, you know, come rain or shine.
Yeah, the rich keep spending even in a downturn.
Absolutely.
The super rich.
Yeah.
Speaking of which, they also look to invest and buy up you know, stocks that look cheap in times like this. Some of the winning sectors in terms of trades for equities that did well under the first Trump administration, financials, you know, tend to do well. So just punching up, you know, Citi and the like. We have Citi all sessions here, down 2.5% at the moment, but you know, the likes of Citi, Bank of America, they tend to do well. Industrials also tend to do well, and airlines, American Airlines. Let's just have a look at that. They're being lifted still at the moment overall, due to the return or the continued post-COVID glow. But you know, we are seeing American come off slightly. This is the daily chart here. People, do you think this is a blip, or do you think that this is a change of or a pivot point for this stock?
I think it's a case of just, you know, waiting to see the space, waiting to see whether that post-COVID demand continues, and just sort of going from there and seeing sort of how the economy continues to perform, particularly in the US. And I think obviously the unemployment data and the interest rate trajectory will play quite a key role in that.
American Express, Bigger Bees is asking. Now, American Express is a very interesting one. Earnings per share coming in slightly above estimates. Just showing you American Express there. Here we go, because it is Bigger Bees and an all-session stock. Is it Bigger Bees or Bigger Bias? Please let us know, because we'd like to be calling out the correct pronunciation. So it has been rising, but it did come off there. This is my daily chart. And it has to be said that it's down 1.4, I believe, because of its outlook. I mean, American Express has seen, you know, a huge rally in its shares. Have a look at that. I mean, if you bought that at around that period, oh, my chart. Here we are. This is the daily chart, people. But if you bought around, you know, June 2024 last year, look at how far this has run. It's
brilliant.
It's impressive, isn't it?
Just a bit like Rolls-Royce. I mean, I think I was actually looking at that over the weekend, and if you bought it, I think September 2020, it was about 60 pence per share, went out over £6.
Yeah.
So it's just the hindsight, wishing I'd have bought more shares.
You put all your money into
Exactly.
Rolls-Royce. Yeah, I've got some Rolls-Royce too, and it's just,
The chart is it's almost like fake because it's just going up. it's like it's been just artificially drawn upwards. It's been very positive. But look, I think a testament to how the new CEO's turned it around.
Yeah. But it has had its dog days as well.
Course, yeah.
Like, during COVID, no one was flying.
Yeah. And a few years prior to that, I think we were looking at sort of a 70% drawdown from peak to trough for Rolls-Royce. So, really, really torrid time at a period.
Yeah. I mean, the thing with American Express is I still like it. I still like the stock because I just think that it's still underpinned by that strong sentiment that U.S. consumer resilience. I mean, you might see all these statistics, and I try and have a blend of numbers from all the the usual Atlanta Fed, Philly Fed, but I also use Statista as well. And it's incredible that their debt is going up, but the spending is still rising. Right?
Yeah.
You might see a rise in delinquencies, but you see an even bigger rise in.
And obviously, they're quite happy to have interest.
Yes.
Be paid on these delinquencies and these monthly debts which are rolled over. But I think the interesting thing about American Express, and it's one of its best USPs, is if you've got an Amex card, it's got that member since status.
Oh, yes.
And I think it's such a brilliant marketing tool because you're never going to cancel your Amex because then you've got to, if you've been a member since 2002, you cancel your Amex and you've got to reapply again, and now it's member since 2025. So it's this sort of status symbol, which I think is such a brilliant marketing tool, which is why they've been so successful in their credit cards space.
And their American Express VIP areas.
Definitely, yeah.
As well,
yeah,
right?
Yeah.
You have loads more of that in the US, Trader Friends. Not so many here.
No.
There's one in the O2. Are you one of those with that member since 20?
I do have an Amex card. I don't have quite all the benefits.
The downside with the Amex is you will be shown the exit if you present it in Asia.
Yeah.
Because their fees are super high compared to all the other providers. And so there are lots of signs saying, we do not accept Amex purely because of that.
And obviously they've got the famous Centurion card, which is this, which I think only about a handful of people have, but that's kind of this esoteric, godlike status that Amex have.
Yeah.
A bit like a Nando's black
And
card
it shines. It shines. What's peculiar as well is that Centurion card holds true for the US and here. But yet again in Asia, which I found quite peculiar every time I go there, is that for them the top card is a matte black.
Really?
Yeah. So like if you get a matte black card, everyone's like, oh, right? It means like her credit limit is super high, which is quite funny because like the just the bog standard here is a black card.
Yeah.
Like the first direct card or whatever, but. Yeah, back to this. I mean, personal debt in the US has been consistently
I think since
rising.
2022, really.
Exactly.
So we're looking at sort of 2.5, 3 years.
Yeah, and I read some crazy figure out there, Aaron, that the consumer credit debt of households amounted to more than $5 trillion US dollars. This is on the Statista side. That's nearly twice the figure in 2011. And they are still spending. And on that note, we are going to go to a break. I thought you said it was soon. Do we have time? Because I was going to quiz Aaron. One more question? One more question. Right. So Trader Friends, Dan Ackworth here asking to buy and sell with crypto. Dan saying they offered me Amex Gold, but I declined. I would rather have a crypto exchange.
Fair enough.
Interesting.
Yeah.
Interesting. Also, that is a good point because when I was in Chicago and Michigan, there were lots of signs on cafes saying we accept crypto.
Yeah.
Here.
Really?
Yeah.
Oh, wow.
And these are cafes. So
I
Dan,
hope it's not like the pizza guy who spent like 12 Bitcoin on a pizza. And most expensive pizza ever turned out to be.
Oh, yeah. Dan also asking about or mentioning that Reborn Coffee. Have you heard of Reborn Coffee?
Haven't, no.
Reborn Coffee. Do we have this on the system? and saying up another 45% this morning. I have to admit, this is not one that I have ever traded, but Amazon is still, let me check for you, and Amazon is, it was down earlier, it's still down more than 2% there. Amazon is going to be a key one, I think, because...
Expect volatility this week, upwards and downwards.
It has had a lot of volatility, and we are waiting on Amazon's numbers, especially I want to see how it did over the festive period, given we've had so much competition from the Temus and the Sheins, that Amazon is having to really ramp up its different products. Have you heard about the Amazon bundle?
No, I haven't.
It comes in different names, but in some places it's called the Amazon bundle, in other places it's called Amazon basket. You literally have, like, if you spend 50 quid, for example, and you pick up all these things that are in its special Apple bundle, then they cut off like 10% or 20%, but it's like a carefully curated number of items, and you have to get past that mark, and they're all, you know, like small items, right? Cream care, you know, some crazy gel that you can use in the car that takes out every single bit of dust, random things. But if you get over 50, they take off 10. Right, Terence?
It was 10,000 Bitcoin for the pizza. That's
10,000 Bitcoin.
That makes me feel very, very sorry for that chap.
We have to wrap up now. Monkey Man, thanks for your comments. I'll get to that soon. Amazon up and down, but what's Alibaba doing? I'll get Aaron on that as well. But Aaron, thank you so much for joining us on this Monday morning ahead of an exciting non-farms and tariffs weekend.
See you soon.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to Market Measures, where today we're looking at small to medium cap stocks. So this gives you that idea. The reason that Sahil's looked at it is the breadth of the market started widening last week, and we may see it again today. So we're having a close look at trading small cap stocks. Now, the four most recognized US equity benchmarks are, of course, the Spiders, the Nasdaq, the Russell 2K, and the Dow Jones Industrial Average, which is a zero meaningless index. While the Dow Jones is famous worldwide, it is meaningless. And the S&P 500 is favored by traders for its focus on 500 large cap companies like Costco, JP Morgan. Right, so that's your stable and reliable choice. Meanwhile, the Nasdaq is all about tech with exciting growth stocks like Tesla and Nvidia that attract traders looking for those big returns. However, the Russell 2K is a crucial benchmark for US small cap stocks. It serves as a comprehensive barometer of the smaller cap sector, providing more insight into the economic contributions of those emerging enterprises, often in the early stages of growth and hence not usually profitable. Now, despite that importance, the Russell 2K has seen less discussion in recent years as other indices have hugely outperformed it since the pandemic. Even the meaningless Dow Jones, designed for lower returns with lower risk, has outperformed the IWM in total return over the past 5 years. So that raises the question, Angeline, are small companies losing momentum? So in America as a whole, are small companies losing momentum, or is there still an advantage to investing and trading in small cap stocks?
Now, to explore this, and I really want to know, because I want to be ahead of any sort of, rotation.
And that's it.
And finding the areas where you're going to see biggest relative growth and return. This is fascinating for us, right? So we're going to review the nature of the small cap index. The market cap of the stocks within the Russell 2000 is significantly smaller than those in other indices. To be included, a stock must have a closing price at or above $1 and a total market cap of at least $30 million. And currently stocks in the Russell have a much higher market cap than the minimum requirement, ranging from $3.9 billion to a whopping $92 billion.
Wow.
The top two weighted stocks, MSTR at $92 billion and CBNA at $50 billion, have market caps greater than $20 billion, but with the majority being much smaller in scale, less than $10 billion. That MSTR, of course, is MicroStrategy.
Now, in comparison, the total market cap of the S&P 500 is around $50 trillion. No great surprise that it's up there, the same growth level as the federal debt. Imagine that they can just produce as much debt as they like, and the S&P 500 goes up as well. While the Russell 2000 is less than 1/10 of the S&P 500. Put this in perspective, Microsoft alone has a market value of $3.5 trillion, surpassing the entire Russell 2000 index, the entire FTSE 100, the entire DAX, and the CAC. So yeah, there we go. So 50 trillion versus between 3 and 4. Now, despite the smaller size of its component companies, the Russell 2K itself is not insignificant. The IWN is the 7th most actively traded equity based on the options trading notional value. That's not far behind the QQQs, that's incredible. This indicates superior liquidity for traders. So there you go, $300 million a day is the 90-day average notional. So yeah, really impressive on the options there. If you want to play it via options, that can be a good way. So it represents several compelling opportunities. The growth potential, of course, small cap stocks can offer significant growth and diversification. The pricing inefficiencies, because less coverage from analysts, like not the 35 analysts that cover NVIDIA, that can lead to pricing inefficiencies, creating the opportunities to find undervalued stocks. And then, of course, economic sensitivity. The small caps really are more sensitive to domestic economic conditions. So that allows traders to capitalize on domestic trends. Now, small caps may have underperformed other indices recently. They have shown better performance over the long run. And this is really eye-opening, actually, because in 25 years, the IWM has actually outperformed the Spider 14 times, or 56%. And 44% it's outperformed the Qs, and outperforms both of them 40% of the time. So considering the last few years, then you can really see the opportunity for the diversification here.
And in times when you're not quite sure about where markets are heading, got tariffs popping left, right, and center, U.S. economy, got jobs coming up. This might be a good way to diversify and try and get away from some of those big tech or big companies in the U.S. that may have done really well the last few years, but now you're not too sure.
So the last time that the IWN outperformed the Spider was 2020. That is incredible. And then, yeah, before that, we're looking, we have to go way back to get it. 16, is that? 1980, 17, 16, yeah, 2016. So I guess that was with the cut in taxes, corporation tax. So what are the takeaways, Angelique?
So here are the notables. The Russell 2000 provides exposure to a broad range of small cap stocks across various industries, giving us opportunities to seek growth and diversify. And although the Russell 2K hasn't performed well compared to other indices in recent years, over the longer term, it still yields great returns, outperforming the SPY, in more than 50% of the time. And also, I was going to say, this is something new that I found out as well. If you are not too sure about the Russell, because like myself, you're either so used to, you know, the NASDAQ or certain specific stocks, there are ETFs out there that you can patch into on the IG platform and trade those for a broader sort of diversification play. There's the Vanguard Russell 2000 ETF, and there's also the Vanguard Russell 2000 Growth.
Right, good stuff. That was, shall we do a quick chart of it? Let's see how it's performed on the daily chart. There we go. So it's at a really interesting level. You can see it if we maximize that. Is that just one huge cup and handle, Angeline?
It looks like it's, yes, it looks like it's definitely forming, isn't it? The handle bit especially. And I'm just looking at the Vanguard Russell 2000 ETF, which also roughly on the daily chart mirrors yours. What is the start of
You would hope it would.
Yeah. If it doesn't, we're in trouble. Yeah, and I just think that it's, if you hold long term, but does the survey, does the research tell you how long for you have to hold to make that return, those impressive returns?
Does it tell you how long?
Yeah, because it really depends on whether, you know, your time frame, right?
Yeah, yeah, absolutely. Right, excellent. Coming up, teaching Pega to trade, we're talking about Theta and Vega.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome, welcome. Teaching Pega to trade. How are you, Pega?
I'm good, thanks. How are you? How was your weekend?
It was wonderful because I'm sure your husband James will also have been very happy on Sunday afternoon.
Saturday afternoon.
Saturday afternoon, sorry.
Yes, it was a full-on rugby start of the Six Nations weekend in our household. What about yours?
Yes, well, it wasn't in the household, it was in the pub.
Okay.
But certainly, I must admit, Scotland had an incredible first half. And then suddenly in the second half, we looked a little bit shaky.
Yeah, but it was great to see Italy playing so well, right? And I think that, you want all of the teams in the Six Nations to really go out and put in their best effort. So it'll be an exciting Calcutta Cup this year.
Oh, yes, it will. Oh, bring it on. I'm going to try and get tickets for Twickers as well. Right, well, we can actually, I think we can put today's lesson into rugby terms.
Okay.
But also, we had a little discussion coming into the office last week about your business that you were involved in. What industry was that?
Yeah, I used to be in the specialty coffee business.
And this was before the world of HR. I thought people were born into HR. I didn't realize they had lives outside.
Yes, I think that, people come to HR from different perspectives. And I think having an operational lens is just one of the different commercial lenses that one can bring to the people function.
And you could come from being a traffic warden or a police, prison warden.
Or even a TV host.
Is that an invitation? Good stuff. Right, so we are going to look at Theta and Vega. We've already done Delta. We've already done Gamma last week.
Okay.
You're relatively happy with those?
Yes.
This is one that is really your friend, and one that it can be your arch enemy at times.
Oh, gosh.
And can sneak up on you on mornings like this morning and really, really hurt.
Okay.
So you can decide which one's which.
Okay.
Let's start off with Theta. So chart up. Thank you, Terence in the gallery. So the daily rate of decline of the option's intrinsic value. So it's as simple as that. It's time decay.
Okay, so that's as you get closer to the date in which the option needs to be
That's exactly right.
executed. All right.
So short premium positions with large positive theta tend to benefit from more rapid deflation in price. Benefits from theta decay tend to increase as the option approaches expiration for short premium positions, right? However, this benefit is offset by gamma risk. Now, what does that actually mean?
Yes, that's exactly what I was going to ask you.
And start off, thank you, Terence. The theory of theta. Let's look, were you ever a member of Pret, the coffee club?
No, I will reserve my opinions
Because
about
you like coffee.
coffee from various locations.
Your coffee was much better, I presume.
I think so.
Yes, I'm certain. Now, let's say you gave out a promo card
Yeah.
on a Monday.
Okay.
And that promo card was one free coffee every day. Right? Now, as let's say it cost me £8. Well, what would you charge for that?
So that you can have one coffee every day for 5 days.
That's right.
Yeah, I think £8 seems reasonable. You get then your Friday for free.
Yeah. Oh, it used to be, what, £3 a coffee? Well, yeah.
Our most popular was £3.90.
Right.
10 years ago.
God, £8 or £12 then. But the idea is that I've bought this thing that has a time value because I can only use one a day. So if I miss a day, then the value of that voucher drops.
Yes.
And as the week goes on, if I was going to resell it onto somebody else, the value would obviously drop as well.
Yes, absolutely.
That's theta.
Simple as that. In theory, it would be non-transferable, but for the purposes of this exercise, let's say that if you were going to sell it on, yes, you would have to sell it for less because people would get fewer coffees over the remaining days.
Exactly. So thankfully, listed options are fully transferable. So we've got a market to trade those on, which means that theta is really important.
Okay.
And yeah, so it's really nice and simple. And of course, to me, on the other side of that trade, if I'm selling options, if I've sold you that card, like Pret a Manger did with their membership, they got it completely wrong because they said you can have 5 free coffees a day for £20 a month.
Yeah.
Right? And they miscalculated that so badly. So they had to raise it to £25. Then they had to raise it to £30 a month.
And now they've gotten rid of it altogether, I think.
Because it still wasn't making money. So the theta decay was not going quick enough for them.
Yeah.
But if I am short that, and if I've sold you the voucher, right, then obviously I want time to pass as quick as possible. Because in theory, I can bank that money every single day as the voucher's value is dropping.
You can bank the money every day but you only sell it once.
That's right. But you can't really bank that money straight away.
Okay.
Because the voucher's still got a value. So if I sell you an option, then there's only a certain amount that comes out of it each day. And that increases towards expiry.
Okay.
Okay. Right. Shall we move?
It increases, I guess, if you're in the money because it could still, we know that the delta can, it can be above 0.5 or below 0.5. Mm-hmm. But I'm guessing like on the last day, if you're out of the money, that the theta is not going to be very much.
So remember, there's 4 things that come into the pricing.
Okay.
There's the delta.
Yes. The gamma.
The gamma. The theta.
Okay.
And then the last one we're going to look at is volatility or vega.
Okay, so theta is just one of those inputs into the price.
And that simply decreases over time.
Okay.
Now, it decreases at different rates depending on how long till expiry, but it's the most simple of them all.
Oh, great.
It's just exactly as your coffee cards, the closer you get to the end of that card, the more that comes out of the value.
Okay.
Which is great, because if you're selling options, you wake up in the morning and you've got $200 coming your way. If the world is as we left it the night before.
Which, let's see if this morning.
Yeah, exactly. Yeah. Days like this morning, we don't want to be looking at the Vega. So,
Okay.
now, implied volatility exposure. So it's the rate of change of the option's price given a 1% change in the IV of the underlying. IV, implied volatility.
Oh, okay. I thought it was the number 4.
Very
Okay.
good. So I've never even thought that. How can I have missed that? Right, short premium positions benefit from decreases in the IV, right? So if volatility drops, then the price of the option drops. However, since volatility generally has velocity to the upside, short premium traders generally want to manage exposure to changes in IV. So this is the one where if you are, chart off, thanks guys. Terence, chart off, thank you. If you are short volatility, then you really want nothing to happen.
Okay.
I think the guys in the gallery have fallen asleep here. So chart off, thanks Terence. Right, so we are going to look at the volatility index here.
Okay.
Right, and that is what generally IV is priced off. So, and chart back up, please. If we look at this, it's hard to see the numbers on the side, but this is the number 16.4 around about here.
Okay.
Okay, so that's about 16.4. Now, if you take the square root of the number of trading days in a year,
Okay.
you don't have to do that math,
Okay.
don't worry.
I was all geared up to do the square root of 16. I was like, yes, I know this one.
Yeah. So the square root of number of trading days in the year, which is, once you take weekends out, you take bank holidays out, then it comes to, the square root is about 16.4.
Okay.
Now, this is just one of those things we accept in life, right? That means that the underlying stock is expected to move about 1% up or down in any one day, right? If volatility is about 16.4.
Okay.
Right? So if like today, we were about 16.4 coming into today, but volatility is up 7%, that's because people are becoming more scared and more fearful. So it's often called the fear index.
Oh.
Right? Now, if volatility goes all the way up to 32, like it did on July the 5th, in fact, it went up way more, but we're showing it for the, on the option here, guys, please put the chart up. We're showing here it got up to 32 very quickly. That means that going forward, every single day, we're expecting the underlying to move by 2% up or down.
Because it's double 16.
Because it's double 16, exactly.
Okay.
So if you're expecting a move of 2% up or down every single day, because the implied volatility has risen, that means the option is more expensive.
To buy and sell.
To buy and sell.
Okay.
Because, of course, if you're talking about getting towards your strike, if the market's moving more, if the implied volatility is higher, that means you've got more of a chance of it getting to that strike.
That makes sense. And it could be, the volatility means that things can go up or down more rapidly. It's not necessarily a positive or a negative. It just is, again, that sort of acceleration of the rate of change of the price.
That's right. Yeah, it's not inferring that it will be up or down, but there's just a lot more volatility because there's a lot more fear. And of course, when there's fear in the market, there's a bit more, blood flow around the heart, and decisions are getting made. Maybe it means that the economy is particularly sensitive to interest rate decisions or economic announcements, or stock in particular. Implied volatility tends to go up into earnings reports, or if there's, a Chipotle, an outbreak of E. coli or something like that.
Yeah.
So we see that in the Tasty platform by looking at now what stocks. Since we're talking about coffee, let's go for Starbucks.
Great.
So you'll see the volatility here, IVX.
I see implied volatility. Okay.
About 25%. So it's great that Tasty actually put the implied move in as well. So let's look at a 46 days to expiry, as we always do. The implied move is $5.57.
Okay.
Okay. So that's on a vol of 26.
Okay.
So if you look at that compared to...
Is that IV is the same as Vega?
That's exactly right.
Yeah. Okay.
Implied volatility.
I'm going between the Greek numerals, the Roman numerals and the Greek letters, but yeah, the IV is the Vega.
Yeah.
Okay, got it. So yeah, so that's at 25%. So it's between that 16.4, which is 1%, and the 32, which is 2%. So it's somewhere between the two, like about 1.5% daily change.
That's exactly right. Yeah.
Okay.
Now, also, we've got something called an IV rank, right?
Wow.
And this is up in the top corner here. Now, the IV rank measures the implied volatility of Starbucks relative to its own volatility over the past few months.
Okay.
So it's like, right, where is its IV at the moment compared with how volatile it has been? And if it's a lower number, it means it's less volatile than it has been. And if it's a higher number, a plus above 50, then you know that Starbucks is especially more volatile at the moment than it has been in the past. And what does higher volatility give us in the prices of the options?
Well, it means that there's more change, more extreme in the prices.
So the option itself is more expensive.
Yes.
So therefore, if you're an option seller and you're looking at putting on a trade, then IV is really your friend. So you want it high. You want that IV rank to be high to put the option on to sell it. And then you want the IV to drop over time, because then you take in profit from the volatility dropping and you take in profit from the theta, because you're being paid every day for that.
Both. I see.
Yeah, and that's it. So in an ideal world, you'll get money from delta and gamma because the stock goes in the right direction.
Yes.
You'll get money from a drop in volatility, and you'll get your theta as well.
So there's a lot of money to make in options. A lot of different ways to make money.
That's right. And as long as you keep drinking your coffee, then you'll be all over it.
Okay, next one's on me. Thanks so much for the lesson today.
Good stuff. Right, that is Teach and Peg a Trade. Next up, it's Axel's Trade of the Week. Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction, regular platform feature highlights, and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Hello and welcome to this week's Trade of the Week on Monday, the 3rd of February. And what a start to the month it has been. Volatility has increased dramatically, and that has had an impact on all asset classes. But let's start off with our trades from the beginning of January. We had a Tesla trade on, and you can see that unfortunately that trade just got stopped out before the Tesla share price went back up again. We had our stop loss down here at the early January low, and we got stopped out last week. So that was a 2% loss with regards to that trade. And then what we also had on from a couple of weeks ago was a long S&P 500 trade, which looked good because we went back up towards the all-time high, but we've now gapped lower, as you can see here, because of President Trump imposing 25% tariffs on Mexico and Canada and 10% tariffs on China. So what do we do now? Do we keep our stop loss down at the January low and risk 2% of our capital? Or do we just bite the bullet and take a small loss? Because after all, we got into this trade about 30 points higher. So with regards to percentages, we're probably risking, I don't know, 0.3% or something like that. That would be my preferred scenario, simply because I don't want to have the risk of seeing what the US market will do later on when it opens properly, as these new, well, it could be a beginning of a trade war, which could have a hugely negative impact on financial markets. And the gap we've seen so far with Friday's low might actually stay in place for a while. It might get slightly filled over the next few days, who knows, but the risk is simply too big. So for me, I'd just get out here with a very, very small loss on this position. And last week we went long the oil price. We did so at $74 on WTI, as you can see here on the daily financial bet. We had our stop loss down below the August low because we had a confluence of several lows and highs coming into this major support area. And lo and behold, we bounced off that support area on I believe it was on Friday, yes. And since then, we are currently heading back up again towards our entry level at $74. So we should keep our stop loss at just below $71 on that trade. Which brings me to this week. And quite frankly, I personally wouldn't trade. Sometimes the right thing is to not trade, basically. Sometimes it's better to wait and see what happens and don't trade. So that's what I would do personally, but because you want me to look at trade of the weeks, I'm going to give you one, and that is to go short the VIX. So let's just have a look at the chart, and you can see the volatility index has risen, and we have a gap. And the question is whether if the US opens later on, we will see that gap being closed, or whether we could see a further acceleration in the VIX, in the volatility index, the fear index, like we saw in December. Now, if you want to do that trade, it's a very risky one. As I said, I personally, I'm not going to trade it, but if you wanted to do so, you could potentially sell at 1943 on a minor bounce, and then you have a stop loss just above these highs here, going back to October of last year. And you just place it above that high at 2043 with a downside target just below the gap closure around 1743. So in theory, you could then make a 2-to-1 risk reward trade on that, but it's a very risky trade, and sometimes it's better not to trade. So this week's trade of the week is to short the volatility index, but at higher levels at 1943 with a stop loss at 2043 and a downside target at 1743. Hello and welcome to Technically Speaking. What I would like to do today is discuss what's been going on over the weekend. With regards to financial markets, big drops by about 2% or so in a lot of European equity markets, and we expect US markets to open lower as well. And I would like you to send your questions in, and I'm sure you have lots of questions, because everything can change here. What we're seeing at the moment could be a pivotal moment in our long-term trends. And why is that the case? Because basically President Trump has done what he said he would do, but nobody quite believed him, or a lot of people at least didn't. And that is to impose 25% tariffs on not just the US's closest trading partners, Mexico and Canada, but also 10% tariffs on China, with the threat of also imposing tariffs on the European Union. Now, the UK seems to have gotten away so far from what we've heard, and Trump apparently can talk to the UK, so we'll have to see. So maybe some people say Brexit was a blessing in disguise. I'm not commenting on Brexit here. I'm just saying something that is out there and at the moment. And basically, why is all of this a pivotal moment? Well, basically, if there is a new trade war, and this is what it could be the beginning of, and if these tariffs, which are absolutely huge on Mexico and Canada, were to last, then the impact would be extremely negative on not just these economies, but also on the US economy. So basically, with regards to the US, what would happen? Well, basically, you have already Canada retaliating with its own tariffs on US goods. So the US consumer is paying more for imports from Canada by 25%. So a lot of the goods that come from Canada and a lot of the goods that are manufactured in the US, which use Canadian components, will have an immediate increase of 25% in those costs. So that is going to lead to inflation in the US, even though some of Trump's allies over the weekend said it's not going to create inflation. President Trump has said that in the short term, the US consumer will feel the pinch, but longer term, he believes it's still a good idea to go ahead with these tariffs. But what we could see in the US is perhaps some analysts say 1% rise in US inflation. And what that has led to earlier this morning is that according to the CME Fed funds rates watch, what is now priced in is 3 rate cuts this year, not just 2 that we were expecting last week. So we have on the one side rate projections being down, but this time it's not for good reasons such as the economy is looking good, etc., and we want to decrease rates. This time it's because the Fed might be worried that the US might actually have slower growth, increased inflation. So it's sort of a bad rate cut in inverted comma and not a good one. So just be aware of that. And also the impact on other countries such as Canada. We can look at the Canadian dollar if you want in a minute. Canadian dollar against the US dollar, the currency pair is trading in 22-year lows. And if you look at Mexico, if 25% tariffs on Mexican imports into the US were to last for a whole year, some investment banks have now done studies on this and said that basically it could cost 1.5% of GDP for Mexico. So basically, we have a big risk of countries like Mexico going into a recession. So just be aware of all of this impact potentially on the global economy. We haven't even mentioned China yet. We haven't mentioned to any large degree the European Union. And all of this could be a crucial moment from a fundamental and macro perspective with regards to equity markets. But if you look at the charts, yes, we've gapped lower so far, but we've held above key technical support levels. And as you know, I'm a technical analyst more than anything. So let's just look at some charts and look at the S&P 500 and keep your questions flooding in, please. So what has happened? Last week, if you remember, last Monday, we dropped down in the S&P 500 and basically retested this broken through downtrend line, which is now because inverse polarity acted as a support line. And funnily enough, the same's happening again today. Now, this little doji here was the Sunday trading on the daily financial bet on IG. So you can ignore that because that won't show up in any official chart you may look at of the actual S&P 500 index. But you can see here we're holding around there once again. So we've got a gap, and we had a gap last week, and that gap got closed. You saw here, that was the gap between the previous Friday's low and the Monday's low. And now we have this Friday's low and Monday's high so far. So that gap here between Friday's low and Monday's high was closed, and we nearly made a new all-time record high on Friday before closing lower. The question is, can we hold around current levels later on today and close this gap? In which case, it may just be an ABC correction in Elliott wave terms, and we may still make all-time record highs. Now, what would also possibly, or what could happen, is that when the US markets come in, we see a sell-off in the S&P 500 take us below today's intraday low and below the low we saw last Monday, in which case we could slide back down again towards these lows here. And this is major support made up of the mid-November to January lows. And you can see there's a cluster of previous lows. And for me, the line in the sand for the long-term uptrend, I'm not talking about the long-term uptrend that has been in place for over a year now, is basically the low going back to the 13th of January. And that low was made at 5,771. If we fall below there, it may well mean that we are in the process of forming a major top and that we could see a significant decline, which could take us several thousand points lower, perhaps even all the way back down again towards the August lows. So that is a possibility, and it will depend on whether there is a actual trade war then going on or not in the weeks and months ahead. But all of this is projection. So what you need to trade is actually what the market is telling you. Right now, we've got a gap. Yes, we've come down 2% or so, but nothing else has really happened yet. So basically, from a longer term perspective, watch the 5,770 low. You can look at the same low on the NASDAQ. You can look at the same low on the Dow. They're all on the 13th of January. These, for me, are the lines in the sand. If we fall through these on the daily chart closing basis, then we may actually fall much further, but only then. So let's look at other things, such as the euro against the US dollar. So what we've seen here is a huge gap again, taking us down towards the low, but not below the 13th of January low. So once again, that is the line in the sand for me. As long as this holds, potentially, because we're holding at this previous downtrend line, and you can see how these can be extremely powerful from a technical perspective. You take a previous resistance line or downtrend line, once broken through, in the future, it often acts as support. And that's what's going on here with regards to the euro dollar. But if euro dollar were to fall through its 13th of January low at 101.78, the odds are very high that we're going to go towards parity and perhaps even lower, because the US dollar is stronger at the moment because there is a risk of inflation rising again in the US, and because the tariffs which President Trump has imposed on Canada, China and Mexico lead to flight to quality flows into the US dollar. So let's answer a few questions. First of all, do I reckon that the volatility index, the VIX, is going to gap up, so it has a huge rise when the US market opens, or will the gap to the downside that we've had between Friday's high and this morning's Monday's low be filled? Because my trade of the week was to go short the volatility index, you've got your question answered here. I believe that we may see, we might not even see a minor move up at the US Open, but then maybe at least a partial closure of that gap with Friday. So the VIX going down in the short term. But it's a risky trade, because basically what we could see over the next few days is President Trump saying, oh, we are going to impose some tariffs on the European Union and perhaps on other countries as well. And that could then again lead to a rise in the volatility index. So who knows? Another question is, what level would be good, a good buy level if you think the tariff issues will be resolved within 48 hours? Well, it depends on which market you're looking at. I don't know which market you're looking at, but basically if President Trump were to say in the next few days, oh, actually, we're going to remove these tariffs, we've come to an agreement with Mexico and with Canada and China, which I believe with regards to China, but that's my personal opinion, is pretty unlikely to happen. But if that were to happen with regards to Mexico and Canada, obviously the market would rally very, very rapidly, and the right entry level might be now, depending what the US market does later on today or around the US Open. But who knows? Another question I get here is, would it be better to be long oil in this environment versus gold? I don't know. I mean, let's look at the oil price. You know that we went long oil last week, and you can see that basically we've bounced off our lows, and the oil price is expected to rally further. But as you can see here, the rally we've seen isn't really that great. So we haven't seen one of these big upward candles. Perhaps that can happen later on today when the US market opens. But right now, the move in oil is pretty muted. And if you look at the gold price, you can see that it's actually quite similar in that we did actually dip with regards to gold earlier this morning, and we are now heading back up again towards our all-time record high, which we made last week above the $2,800 per troy ounce mark. So that here is still an uptrend. Which of the two would outperform is hard to say. You can overlay one chart with the other and see which one outperformed this morning more. And if you look at that and expect that to continue, then you would see that one of the two is probably outperforming the other. But right now, it's a difficult question to answer. All I can tell you is that we are in a very clearly defined uptrend with regards to the gold price. Here, this is just a minor retracement. The trend is still your friend. We're still pointing higher. And I believe that even if we were to come off, can you see here, we've got a really good support area coming in around the 2,750 area. All these highs here is 2,758 going back to the end of October. That's a good support area. And then we've also got the late January low, which was at 2,730. That's also good support. So the whole area between 2,760 and 30, in my opinion, should hold any retracement in the gold price. And it still looks bullish. But having said that, if you look at the relative strength index at the bottom of my chart here, you can see that we've made a lower high on Friday when we made a new all-time high. So this high is higher than the highs seen at the end of January. So we have an uptrend, higher highs and higher lows, but these highs are higher. But on the relative strength index, we've got a lower high than the one we had at the end of January. And that points potentially to a a correction to the downside or a correction against the major trend, because we are basically not confirming this higher high with a higher reading of the relative strength index, and this is called negative divergence. So that could, in the next few days, perhaps lead to a retracement lower. Maybe what we've seen today already has been the retracement lower, we don't know. But if you are a bull, maybe what you can do is move your stop up to below this support area I just mentioned, so perhaps to below $2,730 per troy ounce. So let's just look at some other questions. Bitcoin, very interesting. We had Ethereum, I think, drop 47% earlier today. Let's look at a Bitcoin chart, and you can see that Bitcoin has also fallen quite significantly. But again, what's the line in the sand? And lo and behold, it's our 13th of January low, which I've just mentioned for the S&P 500, which I've mentioned for Eurodollar, which I've mentioned for the Nasdaq 100. And you can see that is your line in the sand here, 94,554 on the daily financial bed, because you've got all the previous lows here going back to late November, which are just above that low here from the 13th of January. If we were to, and in my opinion, it needs to be a daily chart close, to have a daily chart close, not just a fall through on an intraday basis, that low here at 94,554, it is possible that Bitcoin may also form a top. Why? Can you see here that we've made a new record high here just below the $110,000 mark, and it's on the 20th of January. And that was higher than the one made in December. So we've got a marginally higher high, sideways trading range. That's the lowest point. If that is a double top, then we would fall through that low here, and then we could actually slip back towards the $70,000 area, if that were to be the case. And also what you can see here is that the corresponding high in the relative strength index here to that all-time high is lower than the high we saw back in December when we had this high. So we had higher highs on the price chart, lower highs on the relative strength index, negative divergence, which forewarned us of a possible downward move, which we've now seen. We are on track for our fourth consecutive day of falling prices in Bitcoin. But for me, technically speaking, the line is in the sand is the 13th of January low. As long as we stay above 94,554 on a daily chart closing basis, the trend's still your friend, and we're just in a sideways trading range. If we were to fall through there, things could change. There is another question now. If we look at this one here, somebody's got a copper position on. What's happening to copper? So let's just look at copper and let's see what the impact of the tariffs are on copper. The question is that you didn't tell me whether you're trading high grade or just copper. Let's just say you said copper, so it's copper. You can see here again, where are our lows and our highs? So let's look and analyze this chart together. Let's look at where our trends are, and we can all see that we are in a downtrend because we've got a series of lower highs and lower lows. Can you see here that resistance area has become a downtrend line? And you could argue, well, yes, but we also have some support coming in here, which is true. You could take the low down here from the 5th of August low, and that connected up with the late December low gives you a support area. So if we analyze this, we've been trading sideways since mid-November, as you can see here. And right now we're heading back down again. But as long as we hold above this low here, the December low, and because that low is actually very close to the August low, I would say that's not just my last relative low, but I would look at this one here because it's marginally lower. So as long as we hold above the August low on copper, we remain in a sideways trading phase, and we may still go higher again. But for that to happen, we would have to break through the downtrend line and rise above the late January high here. And as long as that's not the case, the downtrend is still intact. But if you are long here, for example, in this sideways trading range, for me, the stop loss would be a daily chart close below the 5th of August low. If that were to happen, it is quite possible that we could then head back down again towards the February low, but only then. But you can see here that low we made in August, it wasn't a surprise to technical analysts because it coincided with all these highs, more or less, that we made all the way back to September of 2023, which acted as support. So that happened again in late December, and it may happen again in the days ahead. So I would wait to see what happens here. And whether we can close that price gap with Friday's low. But for the bulls to be back in control, we need to rise not just above the high seen on Thursday, but also above the high seen here at the end of January from a technical perspective. Thank you very much for sending your questions in. I hope I've shown you that you can have whatever view you have on the economy or on geopolitical events or macroeconomic projections of what you think the markets might do in different countries. But what is really also important is to combine that analysis and your view with a pure look at the charts, because the charts include everything. Right now, the price is nothing else than the equilibrium between buyers and sellers, between demand and supply that we look at in economics. And basically, if you analyze the chart in addition to your macroeconomic or fundamental view, you can get specific entry and exit levels and also stop loss levels on your charts with regards to your positions. So what I tend to do is, yes, I have a view, but I want to see whether that view gets confirmed by the charts themselves, by falling through key support levels, for example, in our cases here on these markets I just mentioned, or whether we can hold and close the price gaps we've made this week, like we did last week on a lot of US indices, and perhaps may even make new all-time record highs. That is to be seen. Let's look at what happens during this week, and I hope to see you again next week. Thank you for watching.
T-bone.
We are live. It is Thursday. It's January 30th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan, Milan. We're here for the next hour as we take you through the futures market close on an interesting day where stocks rebound ever so slightly. We had that quadfecta of tech earnings last night. Who had IBM being the big winner on their scorecard, settling in at an all-time high. Meta comes out of the gates pretty strong too. Tesla able to recover by the end of the session, but Microsoft takes it on the chin. We're now awaiting those Apple earnings here after hours. Markets recover a little bit after a tariff sell-off here, so we can turn directly to the charts. But if you're joining us on the platform or the website, come over to YouTube, tell us what you're trading. Of course, if you're already on YouTube, come over to tastylive.com, see what we're all about. Gentlemen, we had a really big week behind us already. If it was the Deepseek news on Monday, if it was the tariff announcements today, what's come in between with the FOMC meetings and the tech earnings yet to come, this has been a very important week for markets. But as the dust settles here, net, it's not really shaping up to be all that bad. S&P is back to 6,100 right now as we await Apple. NASDAQ is back to 21,636. If we take a look across the board and we go to our charts, we can see that the Russell here is now trading and it filled the gap from Sunday's close, or from Friday's close, Sunday open. We can see that the Dow Jones is trading above last Friday's closing level. So Ilya, is the market changing its mind on what the Deepseek news means? Are we not so alarmed anymore that China chat CCP is going to dislodge American tech supremacy?
I don't think that was the concern to begin with, frankly, because if it was, then Chinese stocks would have rallied on the news, and they didn't. I thought the concern was essentially that the narrative people had in their mind, the extrapolation for the great AI future, was that to build XYZ capacity, we're going to need ABC amount of NVIDIA stuff and other sort of high cost baselines. We're going to need all these data centers and this and this and this and this and this. And then Deepseek came out, and the upshot seemed to be, well, actually, everybody's assumptions are probably wrong. And we can probably get to a deployment of AI sooner. The customer base is probably different because people that couldn't afford the spend before maybe could afford this version of it now. So it looked more like an appending of assumptions than it was a concern that the U.S. is somehow falling behind China, or that's what this means. In any case, though, I think what we've seen since that news is standstill. I mean, nothing has gone anywhere. We got the gap on the S&P. That gap has not been filled. We're still basically where that left us. The first down day and the consolidation thereafter. We're in a tightly wound range. And that makes sense to me because after the news, what we had, after the Deepseek news, that is, what we had was just a barrage of back-to-back macro. The Fed, ECB, US GDP numbers, this thing, constantly, Eurozone GDP numbers, all kinds of macro risk, the Bank of Canada rate decision. It makes sense in that context that the market did not want to have conviction. But now that's out of the way. All we're really left with is the PCE numbers tomorrow, and the market is generally very good at benchmarking those. The surprise factor there is probably minimal. So no surprise in PCE. No one cares that GDP was light and had the first decline in investment since the first quarter of 2023. Not important. We get through the Fed. Powell does the dance perfectly, manages not to upend anything at all. The total shift in cumulative policy expectations by year end have moved a grand total of 4 basis points since the beginning of the week. Just an expert dance from Jay Powell, just incredible. He had to not rock the boat, and he was perfectly still. So we have now what to go back to. If the market thought that all of these things would be encouraging, we'd be seeing a rally. If the Deepseek situation were resolved, or even if it were possible for it to be resolved within a few days, as though it's some sort of an event rather than a course shift, that's certainly not occurred, or the markets would be surging. So what are we left with? I think we're left with the de facto ex ante before macro risk. That is to say, we are back in an uncertainty of AI deployment kind of a story with not much else to show for risk sentiment to glom onto as a catalyst. That feels like we're probably in for a rocky day to end the week tomorrow.
Dylan, the NASDAQ has recovered here a little bit over the course of the week. It's now down by 1.3% week to date. It's certainly not the 5% loss that we were looking at at the lows on Monday morning. On Monday, we were talking about, and we've been talking about this all week, if we were to assume a basket of what phase 2 names would look like, for those that weren't here for earlier episodes, names on that list would be, in this particular basket we've been watching, Amazon, Meta, Google, Palantir, Snow, S&P Global, FactSet, FDS, IQV, UNH, and Axon. That basket's up 3.16% this week so far. Dylan, are we just moving the chips around the table right now as we get ready for phase 2 of this AI super glide?
I mean, I think so. I mean, but it's obviously this is probably the most debatable topic on Wall Street at the moment. So, you know, everybody's got their 2 cents. But that's why I was so bold. I think Apple is one of the greatest beneficiaries of, you know, second gen AI or applied AI or device-based AI, you know, more efficient AI, which is why I'm optimistic. I don't care what their numbers are for the most recent quarter, but I'm super interested in how they characterize their forecast. And if they make any reference to the collapsing cost of applied artificial intelligence, because I think that Apple, you brought IBM to my attention, which I honestly hadn't even thought about until you brought it up for me yesterday. And I just think Apple's right there. And I think the Apple chart shows that. I mean, if you look at whatever that Deepseek news was, that was more or less the bottom in this most recent sell-off in Apple. Apple has all kinds of problems, right? In terms of, it's like Tesla. Like, is Tesla trading based on car sales or based on, its business fundamentals? No, it is not. It's based on the billionaire owner's proximity to the president of the United States and promises of the future. Is Apple at this point trading based on Apple iPhone demand? To a certain extent, certainly more than Tesla is trading on Tesla demand. But I do think Apple's in a really good position to exploit future expectations for their success as it relates to applied artificial intelligence. And so that's why I love Apple so much at this moment. Because I think that they're the biggest of the Valley crowd. I think they're in the best position for next gen AI, meaning applied AI, device-based AI, distributed AI.
I actually agree. I don't think there's anything about that story that doesn't make sense to me. For me, the question isn't that story. It's, does risk sentiment allow for that sort of differentiation to occur, or are we just going to go into a risk off mode generally, and so everybody gets hit at the same time? And that seems like the likelier scenario. I think that story will matter and will be a reason that Apple outperforms, just maybe not here and now.
Tesla here today, it's up 2.87% as we look in and settle in after earnings. We see that we gap open higher, but we give back some of those gains over the course of the day. It's been a lot of chop for the past 2 weeks for Tesla. My vested interest for Tesla comes vis-a-vis XLY because it is the single largest, biggest product in discretionary here these days. 233.20 here in discretionary. The position that I have had on for a few weeks now since the middle of the month when we started to break out was long the 240, short the 250 call spread. So that's nice progress towards that today as I'm looking for a return back to the highs that we saw at the end of last year. And it's along the line of that thematic idea that the economy is still doing well. So you mentioned the GDP report this morning, Ilya. I think it's worth exploring perhaps why we saw the GDP report do what it did, or at least turn out with the numbers that it turned out with. So we have a breakdown here of the contributions to GDP right now. And one thing I couldn't help but notice in this contribution breakdown is the fact that this purple area corresponds to private inventories. Now, one of the quips that people have had in quarters past, particularly just 2 quarters ago, was that the GDP number was kind of hollow. Why? Because inventories were a big part of it. If you're building up your inventories, you may be considered to be borrowing from future growth. There's going to have to be a give back period where companies sell everything on their shelves, right? They're not going to keep stocking up their inventories. So you have an inventory drawdown cycle. And we just may have had that here. And we still had a positive GDP number. So you strip out the impact of inventories right now, all of a sudden GDP is closer to 3.2%. And PCE is at its highest contribution that we've seen since the first quarter of 2023. So the American consumer right now is really, really strong.
Strong consumption, by the way, since early 2023 as well. That's actually the interesting thing about this. This was the fastest consumption growth since the first quarter of 2023, and I believe the 4th consecutive increase. So it's been accelerating every quarter this year or last year. This data to 2024. So to your point, very strong consumer, and it's the same reference point for the decline in investment. Investment, the biggest demerit also since January 2023. So same starting point, very different actual outcomes depending on whether you look at consumption or investment. And in contribution terms, almost the same kind of a breakdown here. 2.8% was consumption, and then if you add up everything else, it's essentially negligible, but for a 1% shave off on investment, which is mainly inventory.
Well, right. And so, can we look at the investment and say, well, what's going on with rates? Rates have jumped higher here over the course of the fourth quarter. The Fed cuts rates in September, and then for the rest of the quarter, rates are trending higher effectively. But, and are the reasons why consumers spending money, are they for good reasons? Or are they just putting everything on plastic and hoping that credit card rates fall in the future? I mean, we've seen auto loan delinquencies, credit card delinquencies tick up in recent months. So we can't discount the fact that people are they're using debt to sustain their lifestyle. Savings, obviously, they're low these days, lower than they have been post-pandemic because people have been drawing them down. But nevertheless, the rotation here today, banks up by 0.98%, outperforming the broader market. Consumer discretionary up by 0.97%, outperforming the broader market. And hey, even semis, they're trying to stick their head back above water, up 2.35%. And this probably sets up the most important, at least from my perspective, technical test of the entire week here now, because we obviously have that big gap and breakdown. We lose the uptrend from the August, from those late December and now early January swing lows. We're back to that level here today. I know you're not a fan of diagonal trend lines, Ilya, but I like to play around with them. We close right at that 1 week moving average. We run into it as resistance. We can't climb through there just yet. So is this a dead cat bounce? We probably have a better answer to that question for semis tomorrow. And quite frankly, it feels like the market is digesting the Deepseek news and not necessarily getting too worked up over it. It's figuring out that, hey, if this is really what is going on, then the futures here are getting here faster, and we still probably need to do a bit more CAPEX build out in the short term for these inference capabilities. Dylan, are you surprised in your esteemed career as someone who's watched markets, participated in markets, talked about markets, written about markets? Are you surprised that we haven't seen a more negative follow through here in some of these semi names this week?
Yes and no. I feel like part of it is I think there's still a reasonable degree, and I think understandably there's still a reasonable degree of skepticism as to the actual story, as to the amount of resources necessary for Deepseek, or the degree to which the Deepseek product harvested other resources from other people, other open source or otherwise resources. So again, I think the skepticism of the $6 million number is well founded. If only because it implies that there may be, what all the things it implies. Also, I think that the beautiful thing about a well-defended monopoly and control of the president of the United States, if you're a tech oligarch, is even if there is a better, cheaper mousetrap, if you have a really good, well-defended monopoly and control the president of the United States, which the tech oligarchs have a pretty well-defended monopoly in America and have total control of the presidency, that even if someone creates a better mousetrap, that their ability to prevent that mousetrap from being available is pretty high. So I think that it's a vote of confidence as to the stranglehold that the tech oligarchs have on their monopoly and on the president, as well as skepticism that Deepseek was really a $6 million product.
I think what we've really, this is probably maybe a lost in translation aspect of all this, but I want to share this blog from Dario Amodi. He is the CEO of Anthropic. He notes here, and this is a blog post that was put out yesterday morning, at least when I saw him tweet about it. He points out here how much it cost for them to actually train the models here. So if we go to that, the number he floats is about $13.5 million. Deepseek does not do for $6 million what AI companies are doing for billions. Claude 3.5 Sonnet, mid-sized model that cost a few $10 million to train. He's not going to give an exact number. Because what he's talking about is how much money does it actually use for that particular training run. I think what the market has confused here, we've confused here in the reaction to NVIDIA and the semiconductors, is that the entire project cost all in was not $5.5 or $6 million. It was that this particular training run was about $6 million. And the training runs that you're seeing from Anthropic, that you're seeing from OpenAI, they're costing tens of millions of dollars. They're costing $100 million. And so while there's scale there, it's not, well, they did this for $5.5 billion while it cost us $5.5 billion. How did they do it at, two magnitudes lower? That's not the case right now. And so there's a little bit of confusion here. And the people in the AI space who were really jazzed up about this, the Darios, the Andres Karpathys of the world, back in December and early January, they're now kind of being like, hold on a second, the world has misinterpreted this. They're right to understand the model is going to perform at a high level, but the path that we took to get here, no. This wasn't just like a company was built with $5.5 million. It's this particular run that costs $5.5 million. And that, quite frankly, means you still need the infrastructure.
Which is billions of dollars of infrastructure to then run your little run on top of it, basically.
And I think a lot of people are walking away saying, well, it means the export controls don't work. Actually, I think it shows the export controls are more important than ever. At least that's probably the interpretation the Trump administration is going to take away from this with their penchant for tariffs. Because if you don't have the infrastructure long term, as these AI models get more complicated, you're not going to be able to get that next level higher per se. And so I think you're actually going to see a tighter effort, because if you have the best AI model in 2026 or 2027, you probably have a significant advantage over other countries and economies. And it wouldn't surprise me if, like, again, we brought this up, but if a small country like Angola had the world's best AI model tomorrow, that was AGI, China and the United States would probably invade that country.
Well, right? And this is the whole thing.
So this is a Cold War issue at this point in time.
Right. And you got to give it to the markets. Even when they are on shore in China with all of its peculiarities, let us say, the markets are undefeated. Because if China truly had produced a better model and it had truly lapped the US, there would be a rally in Chinese markets. And what there isn't is that. We've seen a slow oscillating back toward the top of a recent range. If you look at overall Chinese shares, ASHR, it's flatlined. So if there was really a shift in the balance of power, we've seen what happens to these markets when it feels like there is a shift in the balance of power. Look at what happened in September, October, when there was a whiff of maybe finally some fiscal stimulus in earnest to really start China's economy. Then, of course, it didn't happen. But it doesn't take much. If there was the perception that China will now come out of its slump because it has truly lapped the US on AI, markets would tell you that's not what this is, very clearly. And so, of course, now people come out and go, well, it's not exactly the same thing. It's not exactly the same cost. There's this consideration and that consideration. The market's already told you this as of Monday. The real question, to my mind, isn't, oh, is China leapfrogging the US? Of course they're not. That's ridiculous. What's going on here seems to be that you have the possibility now to say, hey, you're a smaller corporate that wants to deploy very targeted AI applications. You can do that with not so much outlay on space age chips and infrastructure. You can do it cheaper. That significantly changes the on-ramp for the industry as a whole. It opens up a different client base that has less money. It perhaps opens up a deployment to other economies that aren't as wealthy. It perhaps opens up a different sort of timeline to get from build out to operational out there showing ROI. And nobody knows what that's going to look like, and it's going to take months to figure out. But what we do know is that the on-ramp we had before, it now looks wrong. And I don't think anybody knows which parts of it are wrong. And I think everybody's going to be incorrect 10 times over in their prognosticating of what that is going to mean. And we're going to have this debate for a long time. But what we do know is that valuations for companies like, say, NVIDIA bake into them an assumption of a path. And you can't assume that path anymore.
Yeah, the path uncertainty has increased here. Apple earnings are due out in about 4 minutes' time. Just a quick reminder of where we stand on this. The EPS estimate is $234 a share. Revenues $124 billion. The implied move through the end of the day tomorrow, if we look at the one-day options, $8.75. It's about 4% plus or minus here. So it's not exactly a huge move being priced into this market. It's maybe up to 242, you know, plus or minus $8. So we're talking about like maybe up to, 246, maybe down to 232. That doesn't necessarily clear out recent lows that we saw just yesterday, right? The low is 232.98. You could see just a drop to the intraday lows that we saw yesterday. That wouldn't be too significant. But if we do break out from here, you can see on a shorter term time frame, we've kind of run into a ceiling right around 240 and a half. And if we can break on through those levels, swing highs in mid-January up at 241.40, perhaps it means we are out of the woods here in Apple. And ultimately then if Apple's participating to the upside and NVIDIA is beginning to recover, then the NASDAQ all of a sudden is looking in a little bit better shape than it was just a few days ago here. The NASDAQ right now, obviously being pushed around by these tech earnings. Dylan, you mentioned IBM being a surprise to you. This is one of those phase 2 companies because of what they do. We talked about Watson X yesterday, an AI that makes AIs. An alarming concept, but it's the future, so we're going to do it. Is this now the company that should be on our watch list? Is this now the next company that's going to go from $200 to $1,000, Dylan? Is IBM?
I mean, obviously it could be. I mean, the thing is, I think you're going to have the nice thing about the second generation artificial intelligence is it's actually a longer list.
It's a much